Realty as well, up 1%. Nifty Metal also doing well, up 0.8%. Consumer Durable doing good, fairly well in trade today, up 0.7%. But something that's seeing profit booking is Nifty Media. Defense also slightly in the red, down by about 0.09%. Let's try to pull up the advanced decline ratio because that will give you an entire view of how broader markets are doing. Well, it's even Stevens almost. It's 1200 advances versus that of 1000 odd declines with regards to where the advanced decline ratio is concerned, but the chart has been narrowing throughout the day. So that's with regards to the entire advanced decline ratio. Let's try to pull up the broader markets and see how broader markets have fared in trade today. And we have Harsh joining in. Harsh, largely in line, but benchmarks are outperforming right now.
Yes, the Nifty 50 is surely outperforming, and the advanced decline is reflecting that. Let's pull that one up, and there you go. Largely 1:1. Just a hint of outperformance that the advances have shown. Let's look at the mid cap and the small cap. So there's been some underperformance there versus the large cap, and understandably so, because the IT pack is what's really driving the large cap index higher. So what you're seeing is the mid cap and small cap indices around 1/3% higher, but in the green, and that's a positive. I want to also quickly look at contributors on the Nifty index, and you will see a dominance of IT stocks there, especially Infy and TCS. So those two contributing roughly 60 odd points to the Nifty's gains today, just those two counters. And along with it, of course, you've got a whole host of others within the IT space which are also gaining in trade. I want to quickly flag off some names for you, and there are quite a few in terms of those which have fallen from the highs. And Nazara, an Imami, a KRBL, a Naveen Fluorine. You'll see sharp falls from the day's high. Some recovery seen in Nazara as well. So it's one of those which have actually gained from the lows as well. But some of these have really fallen from the highs. Gains from lows, Vodafone in focus on the back of that. Eclerx, JK Paper, and Godfrey Phillips. Those are some which have gained well from the lows of the day and seeing some good positive traction, including the likes of some of the other paper stocks as well. On volumes, you have a JK Paper, very strong volume seen there. Imami, Nazara, Eclerx are some of the other places and stocks where you're seeing good volume uptick today. But Neeraj, over to you.
Yep, actually, over to Hemant Kapadia. He joins in right now on the show to talk about his thoughts on the markets as they stand right now. Hemant, good afternoon. As always, really good having you. How are you approaching trade today, Hemant? Because it is a large cap centric, IT centric day.
Very good afternoon to you, Neeraj. Thank you for having me on the show. It's always a pleasure. See, the VIX is hovering near 12, which is not a big deal. It crosses 12 a little bit, but till it doesn't cross 14, 15, not much of a concern. Having said that, there's a bullish gap on the daily chart on the Sensex because of the GST thing last weekend. That's not been covered up fully, which is a good sign. The Bank Nifty had a bullish gap, which got covered up completely. Banks remain weak. IT is oversold. We're giving a corrective bounce. I repeat, a recovery, not a rally. Maybe it goes up some more, maybe a couple of weeks more, but it's not going to sustain. The previous bottoms look like being tested again sometime in September. So as of now, like you said, it's a very stock-specific market. Okay, in terms of sectors, auto as a sector gave a breakout last week. That is sustaining. Metals are looking promising, but they haven't delivered. And if you take a slightly longer term point of view, Neeraj, maybe a year and a half, all the PSUs, the railway stocks, the defense, and the other stocks, they all look good so it's frankly all over the place. Plus, there's an expiry week, plus there's a holiday, plus we have Reliance AGM. So I think it's an event-filled week. But yes, having said that, about 25,002, the market looks like testing 25,212. Above that, things start looking better, Neeraj.
All right, okay. So, Hemant, what about the top picks for the day then?
Okay, top picks for the day. Firstly, I mean, this is frankly speaking a slightly no-brainer. IT is bouncing back. The ones which haven't bounced are giving you a chance. So I have a buy call on HCL Tech at 5 rupees over at 1500. Stop loss 1475, target 1550. Oversold, positive divergence, cross for buys. retracing the fall from 1740 to 1440. So I think Infosys and TCS have led the move. HCL Tech is playing follow-up. The other stock is Tata Chemicals. It looks like bouncing back from current levels. Oscillators on the daily chart have slowly turned positive. Weekly, some of the oscillators are already in buying mode, has taken support on the 55-day exponential moving average, set for a bounce. Long story short, one can buy Tata Chemicals at 945, stop loss 925, target 985.
Okay. Hemant, what about some paper stocks that have been buzzing in trade today? There's JK Paper, West Coast Paper, even Andhra Paper doing very well in trade today. And a lot of volumes also coming in there. What is your view with regards to these counters where charts are concerned?
Mahima, unfortunately, we don't have a paper index. I wish it was there, would have made things easier for you, me, and our viewers and investors. Having said that, as of now, I think JK Paper looks relatively good. Frankly speaking, most of them have given one year corrections. If you look at West Coast Paper, it's been off for not even a year, probably more than a year. So as of now, and if you look at once again getting back to West Coast, 800 plus to sub 400 Mahima. So it became half. So even if it comes to 600 or maybe 650, I don't think it's a big deal. But as of now, what we are playing out is a recovery, and this recovery, I believe, should take it past 580. So if you have a slightly 2-3 week point of view, I don't think it's a bad idea. The long-term charts will take some time to settle. So I would be more positive on a slightly near to medium term point of view.
Understood. Okay. Hi, Hemant. This is Harsh. Your take on an Infosys and a TCS, this kind of move, sustainable on charts? How are you seeing it?
Hi, Harsh. I think sustainable, I don't think so. But a bounce nevertheless, because both Infosys 2000 to 1300, blue chip stock, it virtually fell off a cliff. So it's bouncing back. I believe more headroom is there. TCS has been laggard, so to speak, but nevertheless, recovery is underway. We are at what, 3142 hertz. I think we are heading to a 3200. But I am still slightly worried about the bigger picture. I believe we are in the last legs of a decline, which might not yet be over. So yes, once again, if you have a view till September end or thereabouts, IT looks good, especially the ones which haven't moved. TCS, HCL Tech, both look like moving. So I would consider this as a trading buy. If you're looking at it from a longer term point of view, I'd say 1/5, not more at current levels.
Okay. Thanks, Hemant, for that view. But Mahima standing by. The impact of GST on some of the QSR names, and some of those are really buzzing today, Mahima. Take us through that.
Right, so basically earlier what was happening was QSRs were charged a 5% GST and they did not get any kind of input tax credit, and for a lot of these QSR companies, the raw material that they were purchasing, 12% GST was charged on them without getting any input tax credit. So that was kind of impacting their overall margins. Now a lot of these raw materials that were being charged at 12% will now start to being charged at 5% once the GST norms, of course, reforms are announced, and that could possibly be a positive for QSRs because their input cost overall will go down and that will aid their margins. Overall, if we see raw materials constituting of that 12% GST mark are anywhere between that 10 to 45% for all of these QSRs. We've tried to break that down also for you. Let's try to pull up the table and see. So what we've done is this is the entire breakup of different companies with their revenues and the cost of goods sold and gross profit as of now. Now we've also tried to break down as to how much of this cost of goods sold comes from that 12% GST. If we can try to pull that table up, there you go. This is the breakup. Around 25% for Westlife comes from that 12% mark. For restaurant brands, it's as high as 45%. For Jubilant, it's as high as 40%. And for Sapphire and Devyani, it's 10% and 9% respectively. So once this gets implemented, the basis points in which the margins will improve is highest for something like a restaurant brands at 90 basis points, Jubilant Foodworks around 70 basis points, followed by Westlife at 50 basis points, and both Devyani and Sapphire by around 20 basis points. So this is the GST angle for QSRs, and Why? Of course, they are buzzing in trade today. In terms of the overall view of these QSRs as to how they've performed in Q1, Bernstein has given their various views and target prices for all of these counters. For the Aviani, they've retained outperform with a target price of 200. They're saying that buying expensive growth in a weak macro environment. For Jubilant Foodworks, again, they've retained outperform with a target price of 860. They're saying that overall Jubilant Food remains their top QSR pick, and it does better than peers and continues to do better than peers. In terms of Sapphire, it has retained market perform with a target price of 340, soft performance but promise of self-help on both KFC as well as Pizza Hut will augur growth going forward. And lastly, Westlife is where they are bearish on. They've maintained underperform with a target price of 640. They're saying it's a stable performance as to where Q1 stands, but overall there's positive commentary coming in from management that could possibly improve performance for Westlife going forward. So this is the overall view of what Bernstein has on QSR, and we are also joined by Jignanshu Gaur from Bernstein joining us now. Jignanshu, hi, a very good afternoon to you. Always a pleasure speaking with you. Before I go on to the overall outlook on how QSRs have been performing and what are you expecting in FY26, the first angle that I would like to discuss with you is the GST part. A lot of these companies will be getting benefits from that 12% in raw material to around 5%. How much do you think this will help aid their margins going forward, and how much of this is a positive factor to consider when QSRs are concerned?
Thank you so much for having me. It's always a pleasure to be here. There are two parts to the impact of the GST reforms that are proposed on QSR names. Part one, which I think is the more sustainable and the more impactful part, is the improvement in overall demand if the GST changes. And not just GST change on QSR on food, but in general at an overall consumption basket level. If the GST reduces the outflow for consumers, they will have more money to spend on discretionary. So I think that is what will be more exciting, because it is also more, it changes the base. On the margin, I do expect some part of the pressure that every QSR firm has been facing on gross margin to go away. But I would say a large part of that will be absorbed by the inflationary aspect of food, which they have not passed on to consumers so far, and the margin decline that they have been seeing in the last few quarters. So I'm not very, very bullish on margin impact in the short term. But I think the bigger catalyst should be that consumers should be able to go and buy more food if there is more discretionary item, if there is more money in the wallets.
Jignanshu, the last few quarters or years of this consolidation / downward move that we've seen in QSRs, does GST or the changing dynamics or the consolidation in any way change the prospects for the industry for the next few quarters?
I think what changes perspective for the outlook for the industry is consumer demand coming back. Over the last, I think, 5 years, they've broadly struggled to perform. First, because of the competition from the food aggregator platforms, and then the significant reduction that they saw in the demand situation. I think the aggregator platform peak competition is sort of behind now for QSRs. You are not seeing any new pizza chains, for example, emerge on Zomato or on Swiggy. But where QSRs have to find, what they have to do is, I think, find growth for their fortunes to change. Jubilant remains our top pick because we think it started this journey of buying growth much earlier in its journey than the others, and it's now hence being able to show double-digit same-store sales growth. But the others are still early in their journey, and they have now started that self-help effort to buy growth. So I think buying growth or getting growth what matters, and that can only be done by bringing more customers in. And that, again, can only be done by innovating on menu or differentiating your product versus others. So I would say those are the lead indicators for better performance by QSR firms going ahead.
Jignanshu, in terms of multiple things happening in terms of where government is trying to boost consumption, and QSRs are set to benefit that. There's rate cut, GST cut, there's also income tax cut that's going to come into play. Just want to understand, because it's a two-mind battle. The one side there are people who are trying to eat healthy, and the other side there's consumption boost that is happening. How do you think that both of these will play out together? And will this overall benefit QSR as a whole? And apart from Jubilant, because I know that Jubilant has been outperforming its peers, the other counter that you really like and you really think will outperform apart from Jubilant, which one would that counter be?
It's a very interesting question on whether consumers want healthy when they eat outside. I think in the larger context of Indian consumer, there are two types of people, two reasons why we eat outside. One is typically about celebration, enjoyment, marking a special occasion. Right? The other is where we do it far more frequently. And I think in the belly of the market, the larger part of India market, the main reason to eat out is still celebration, enjoyment, and not necessarily about daily eating out, and hence a very high focus on health. So I would say indulgence versus health. Indulgence wins. QSR targets those consumers who want to indulge and be and get joy from eating that food out. So they both are targeting sort of different segments, and hence I think both will continue to grow at their own pace. They will keep overlapping, but largely both will grow. Besides Jubilant, so our view is Devyani has sort of reached a bottom in terms of their performance for both KFC and Pizza Hut. And there are more positive triggers in terms of performance upside for that name versus Sapphire or Westlife.
Got it. Jignanshu, Harsha, hi. Great interacting always. Jignanshu, let me ask that this cut in GST, who is it expected to disproportionately benefit among QSRs? And would this give that much needed fillip to the industry as a whole? What's your quick thought on that? Is it realistic to see very, very strong growth come through?
I would say the growth will come through gradually, not very, very strong, very quickly. That's the one-line answer, because I think the translation of the GST impact into consumers coming back, there are quite a few hoops that we need to cross through to reach there. So it will be gradual and not sudden.
And your favorites within the space, Jignanshu?
So my favorite remains Jubilant, given their operational rigor. I think they need to demonstrate translation of growth into margins better over the next few quarters for the stock to react even more positively. The second is Devyani. I think they have more positive triggers in the stock ahead of them. Sapphire is market perform. I think Westlife can do better again. Its recovery will be sharp because its fall also has been very sharp in terms of performance over the last 18 months. But structurally, I think their ability to their addressable market and their profit potential isn't as large as pizza as a category. So I think that's a category call between burgers and pizza. I prefer pizza as a category more than burgers.
Jignanshu, just wondering, I mean, when you talk about triggers for a particular business, I mean, these triggers are expansion specific or some corporate event specific? Like I heard you speak about that for Devyani, for example.
Yeah, so I think it's a combination of their performance across KFC and Pizza Hut becoming bottom, and hence surprise in terms of either average daily sales per store or in terms of margins. And potentially corporate action, which we have written about as well, that if that comes through, it will be significantly positive for Devyani.
Last time when we spoke about these QSRs, we were talking about how each one of these QSRs are going aggressive in terms of where store expansion stands, but their area per square feet is coming down. Have you seen a trend as to whether revenue per sales square feet has been improving now, and will that improve going forward considering the kind of expansion that Jubilant, Devyani, etc. are doing?
So for QSRs, given that large part of their business is delivery focused, I don't think revenue per square feet really makes the right metric. But you're absolutely correct, right? They have been reducing store sizes, and the reason is they know that delivery is a way of life. They will not be able to pull back that into dining. For example, Jubilant, almost 73-74% of the revenue comes from delivery business, right? Versus only 26 for Domino's coming from dine-in. For the others as well, this number ranges from 55 to 65% of business coming from delivery. So I think that's why they have been reducing store sizes and focusing largely on kitchen. I think this will continue. I don't think they will become completely dark kitchens because that has other issues related to brand awareness and so on. However, the shift towards delivery is structural, especially in this price point where consumers know that at this price point, they cannot get both good quality food and good experience together. So then if they're not getting a good experience, they would rather get the food at home.
Okay. Jignanshu, I am not sure whether you covered too many stocks on the premium side of consumption. But how do you see that side play out? Because again, the impact may be slightly different there. While we're talking GST rate cuts, but their likely rates will continue to remain elevated. What are the stocks that probably lose out as part of this entire consumption theme, and how bullish are you on the premiumization side of consumption?
I think that's a great point. So like you rightly said, while I may not be very stock specific, but in general, if GST rates for, let's say, premium apparel reduce, they will benefit a lot more than value apparel because the difference in price points will reduce by that reduction in the GST rate, right? For example, if a 1,500 rupee article, 12% GST comes to 5%, that's around 100 rupees cheaper for consumers. And that increases the marginal customer base who wants to buy that product, right? And hence, you get growth largely from marginal buyers, which helps growth across all premium products. So whenever GST rates come down, I think over time, maybe it will take a couple of quarters for them to translate, but we should do better. We should expect better growth. I think the risk that a lot of folks, I think, are not talking about on GST, Harsh, right now, is if it gets delayed, there are people who have pushed back their purchase. So does Q2 get impacted if in expectation of a GST rate reduction, consumers push back their decisions to purchase? And if that GST does not happen, let's say in the next 1 month or so, right? And Q2 numbers for some of the companies where high reduction is expected might be impacted. And these may be in the automotive space or in the insurance space, on the apparel space, footwear, wherever. I think all of those, that's one short-term view which we need to be careful about, specific for Q2, because momentum was building in terms of customer behavior, and whether that momentum gets sort of halted in the run-up to the festive season. So that's the slight perspective which needs to be factored in as well.
Absolutely, and that's a valid point, Jignanshu. Thank you so much for taking out the time and speaking with us at NDTV Profit and giving us all those insights.
Thank you so much. My pleasure.
All right, now speaking of GST rates, the new reformed rates may roll out around September 22nd to boost festive demand. Shimi Chaudhary joins us with more details on this.
Well, absolutely. Government is ready to roll out the new GST structure likely around September 22nd. And in fact, what we are picking up at this point, that the GST Council meeting scheduled on September 3rd and 4th, they are going to deliberate on, of course, the two-slab structure which Centre proposed. And there they are going to take a call and take decision on this massive restructuring of the indirect tax regime. And in fact, sources also hinting at that that soon after the meeting gets over, they are putting out the notification in the span of 5 to 7 days, and perhaps they'll try to implement the new rates likely around September 22nd, and that couldn't be more deliberate, keeping in mind the festive season is kick-starting with Navratri, and in fact they are likely to sort of implement all rates so that it will have impact on boosting of course consumption and the overall festive demand. And as we have been reporting about it, that this two slab structure where a lot of essential item, paneer, ghee, etc., which is currently at the 12% bracket, is moving to 5%, and then your small cars, your aspirational goods, white goods, etc., which is currently at the 28%, is moving to 18%. Now, of course, the special rate 40%, where we could see the sin goods and the high-end cars and the high-end bikes, and that is something is also deliberate upon, and the decision would be taken on the future of compensation cells as well, because there are the states which are pitching for the additional levy in place of compensation as the regime nearing to an end. And in fact we are also learning that government may perhaps able to repay the debt much in advance, even before a quarter, by October to November. So the tax incidence, however, remains the same. So we will kind of see to how they are going to implement the new levy with the center pushing for it, and whether it could be on the high-end car also, because earlier the cess was on the high-end cars as well as the all the tobacco related items. So this is going to be a very high-end packed agenda for the GST Council meeting, and both center and state perhaps will push for rolling out the new rate and the new structure by around September 22nd is what indication we are getting.
Right, Shimi, thank you so much for giving us those details. But viewers, it's time to slip into a very short break, but we'll be right back with the most awaited segment, Heard on the Street, on the other side.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
Thanks so much for tuning in to India Market Close. It's 2:30, so at that time of the show when we get you what dealing rooms are recommending in the session today on our special segment, Heard on the Street. Samit Sarkar is here with his chatter box. Samit, what are you listening?
Well, multiple stocks remain in focus. Firstly is the hospital stocks, Apollo Hospital and Max Health. Dealers are indicating that there are sell flows on large HNI desk on expectation of some negative news flow that is expected for the entire hospital sector. Dealers indicate that some news expected on a bill to regulate pricing. Now, this has been around for quite a while, but that buzz is again there on the street, and that's the reason we are seeing such kind of a negative reaction in Apollo Hospital and Max Health. In fact, Max Health should have seen a positive reaction given the fact that they were supposed to get included in the Nifty 50, because of which there is expected to be positive flows in this counter. The second stock on the list is Tega Industries. Dealers indicated there's a buzz of a big corporate development here. The existing promoters might look to completely exit out of this company, so keep an eye out for Tega Industries in trade as well. For Force Motors and Carnex Micro, there's a buzz of some potential order win in both these counters. Force Motor could win an order from defense side is what dealers are indicating. For M&M and Indigo, dealers indicated there are sell flows seen at higher level on institutional desk. For Sagility, there's some small sell flows on expectation of a potential block deal here, so keep an eye out for Sagility as well. And lastly, when it comes to AB Fashion, dealers indicated there are buy flows on institutional desk. Both foreign and domestic institutions have been buying this counter in trade today, so keep an eye out for AB Fashion as well.
Okay. Samit, where is it that there is the highest conviction? Are people giving more on the long side currently in the dealing rooms? Because I'm sure you heard 10, 12 things, right, and you narrowed it down to the 4 or 5 that you brought here.
Well, most of the calls that are coming in are for longs only at this moment is what I'm getting a sense from dealing room checks.
Okay, very interesting. Thanks a lot for that, Samit. Well, Hemen Kapadia, of course, stays with us, and Sameer Dalal joins in as well on the show. So, Sameer, good having you. But Hemen, I'll come to you first, because there are some of these stocks that I wanted to check with you about. AB Capital, for example, right? The last stock that Samit mentioned. How does it look on the charts? Because it's come up as something that people are talking about now thrice in the last 3 weeks.
Well, Neeraj, frankly speaking, it's doubled in the last 7 months or so. We're at all-time highs. We don't have any known resistance levels. Things look just a bit stretched. I wouldn't be very.
Hemen, I'm sorry. I made a mistake. The stock was AB Fashion and not AB FRL and not Aditya Birla Capital.
Okay, no worries. AB FRL. Okay, Neeraj oversold. Very strong support at 70, and short-term bottom in place. You overcome the 55-day EMA. So I believe we are in the throes of an intermediate up move. So some more upside, yes. We've had a protracted decline for 8-9 months. So as of now, downside limited. We're seeing a recovery, further momentum above 85. Neeraj.
Sameer, before we get about the markets and specific pockets, but this one pocket, hospitals, usually hospitals have done very well. But I think what dealing rooms are recommending are saying that there are some sell flows on HNI desks, because there might be expectations of some kind of a bill to regulate pricing. Have you heard anything to that effect? If something like this were to come about, could it be a big negative for hospital stocks?
So this has been a call that has been going on for quite some time, that there needs to be some regulations. I'm not sure if you read recently in the news that almost about 15,000 hotels had stopped or are going to stop Bajaj Alliance's cashless services because, they were not paying the full amount. And that was likely because, sometimes what's happening is overcharging by doctors or by hospitals is happening. And there is some sort of regulation required. Honestly, at the end of the day, this is a very critical service. You cannot have it totally unchecked. So it is required. Is it a negative for hospitals? Yes, a little bit of a negative. Because that means, the prices can get capped. But I don't know how it's going to be possible to do, because at the end of the day, if you don't allow doctors or hospitals to earn, then the capital investments that kind of need to go into this sector are so high that it's not something that, so it's a catch-22 how to play it. But any corrections in the stocks are interesting to look at. I don't see it being very, very negative. I don't see them being able to tell hospitals not to charge And certain amounts. I'm sure there will be certain things, certain ways to play it, but I don't think it's going to mean the end of the hospital business, or not the end, but the profitability ending of the hospital business. Still think the hospitals will be able to make money. This news keeps coming. We need to see eventually what comes out of it and how it can be implemented without hurting the services of the hospitals. But I would be looking to buy any of the hospitals if they fall significantly because of this news.
Interesting. We've also got a host of changes. We had changes on the Nifty 50, but MSCI rejig now in the pipeline. Somit here with what to expect.
Unless the MSCI rejig was announced a while back, but then what is expected to happen tomorrow is the flows, that is the passive inflow and outflow regarding this amount is expected to come in trade tomorrow in the last half an hour. Stocks that are getting included, Swiggy, Vishal Mega Mart, Hitachi Energy and Vari Energies are expected to see inflows of anywhere between 230 to 293 million US dollars, which is nearly 2 to 8 times the 20-day moving average. On the exclusion side, only a couple of stocks, so now BLW and Thermax. Outflow amount is expected to be anywhere between 120 to 160 million US dollars, which is nearly 7 to 18 times the 20-day moving average. On the weightage increase, there's CG Power, which could see an increase in a weightage, and inflows are expected to be just 56 million US dollars. But on the downside, there is Eternal, which is expected to see a lower weightage owing to the FPI cap, and that amount is expected to be huge, around 571 million US dollars for Eternal, which is nearly 6 times its 20-day moving average. Apart from that, there is Asian Paints, JSPL, Havells. Outflows of anywhere between 40 to 100 million US dollars is expected, which is nearly 2 to 3 times its 20-day moving average. So these are majorly the changes that we are expecting when it comes to the MSCI Standard Index tomorrow.
Okay, so those changes expected in tomorrow. That's a quick correction. I want to quickly ask Himen, any of those stocks on your radar on the back of that rejig, and any suggestions on how to play them, especially in Eternal? That number looked large.
Well, Eternal is overbought. We're set for a correction. I'm not a fundamental analyst, but the PE ratio is scary. I believe that it does not look very conducive at this point in time, but 305 is important, Harsh. As long as it sustains about 305, there is hope for things to remain positive. If it slips below 305 again, from a closing point of view, not intraday, ideally a weekly closing, I think things could start unraveling. We've had a phenomenal move from 45 to 320. There aren't too many reversal signs yet. It's just that the short term, the daily chart has started getting a bit heavy in terms of negative divergence, overbought, crossover sales coming in. Harsh.
Samir, what's your take on an Eternal? So while Himen was giving his view, I was just looking at the numbers. At 23,000 crore in terms of top line, even if I were to take this top line maybe 3 years forward and double it, it's still trading at maybe 6 times earnings, which is certainly not cheap. And that also I'm penciling in 25% CAGR on top line. How do you view the stock? Just trying to understand how one should rationalize this.
So, as a fundamental analyst, it becomes very, very difficult to justify a buy on something like Eternal at this point of time, for the simple reason that they're not really making money, right? We can talk about sales, but I always believe that, top line is for vanity, but the bottom line is for sanity. And at the moment, if I were to look at that part of it, there is none. So let's assume that the top line does double. Let's assume that the profitability comes into the picture and they start delivering maybe a 4,000 crore profit. At that 4,000 crores, the stock would still be trading at extremely expensive valuations. And then once you've reached a particular scale, then to keep doubling your profit becomes more and more difficult. And if the returns start increasing, then competition. See, this is a business where it's very easy, I'll not say easy, but it's possible for competition to come in. And I would especially say not on the food delivery as much maybe, but on the quick commerce side. There are players like Amazon, if with deep pockets, Reliance with deep pockets. If they feel this place is becoming very profitable, they can make a push for this, and then there is nothing stopping the margins coming under pressure. So I'm not in favor of buying in Eternal. I think it's a massively overvalued stock. The risk returns are not there. I think there are lots of other stocks in the market one can look to buy.
Okay, no bets for sector of the day though. It's surely, definitely IT. The kind of zing that we're seeing on some of these counters is very, very strong. And of course, there's tailwind because there's an indication of rate cuts which are on the anvil from the US, which surely means that spending in the US will likely get a bit of a boost, if not more. Let's look at what IT stocks have done and make a case as to why this is the kind of rally that we're seeing. They have significantly underperformed the Nifty on a year-to-date basis, which is IT stocks. Valuations are now at the 5-year low. It's led by slowdown in earnings and growth. In the last 3 years, we've hardly seen growth. Also, it's the lowest in terms of ownership across sectors. So we're seeing a far lower ownership, and there's been a big IT sell which has come through from domestic investors maybe, but especially from FIs. Let me quickly take you through some numbers. Let me start off with the top 5 IT stocks and what they've done since January of this year. Just look at that, 23% lower on a TCS. And another 18 lower for an Infosys as well. So, the top 2 IT names correcting significantly from those highs, nowhere close to where the Nifty is, right? Now, let's therefore add up the valuations and let's stack it up and see, compare it to the 5-year average. It's surely looking much, much better. And even if you don't pencil in any growth to the current price to earnings, it's still a sharp discount to what the 5-year average price to earnings is, except maybe an HCL Tech or a Tech Mahindra. Outside of that, you're seeing at least TCS and Infi trade at a significant discount to the 5-year valuations. Let's talk about the FIs selling. And FIs have sold over $4 billion of IT stocks since March of 2024. We've seen 15 months of continuous selling that we've seen where the IT space is concerned from FIIs. Assets under custody have fallen from 10.3 to 7.4 in July of 2025. Domestic ownership in IT is at an all-time low at this point as well. So IT sector has a potential for a weight up. That seems to be the call. What are brokerages saying? Kotak on IT services, they're saying Gen AI landscape has evolved in multiple ways, improved moderately, expecting a 2 to 3% annual revenue deflation on growth in the next 3 years. But they're saying AI tools with human in the loop to be the dominant AI adoption paradigm. The BPO, especially the CX BPO, which is the customer experience business process outsourcing, and application development and maintenance are more vulnerable segments according to them. Persistent, Coforge, Hexaware are well positioned in this environment. Among tier 1, HCL Tech portfolio has lower revenue deflation risks is what they say, and TechM needs to manage higher CX BPO exposure. So that management will be required from a TechM, but essentially focus more on a TCS and an Infi at this point.
All right, Harsh, thank you so much for giving us those details. Samir, I'll come to you on this one. If you were to play the IT theme right now, what would you do?
So I would not play. I would not be buying into it. I've been very clear about it. And that, just a 25 basis point rate cut is not going to drive the US market cycle significantly higher. It's not going to tell customers out there that, look, we need to start spending huge on IT, which we've, been wanting to do, but we are not doing for whatever reason. I don't see that 25 basis points. I think this is just optimism. I think the markets are jumping too much around to certain noises in certain places. Eventually, rationality will come in. IT is growing at very muted levels. US, especially US-focused IT companies like TCS, Infosys, who have heavy dependence on global markets. I don't see growth going beyond 7 to 10% on the top line and maybe 12% on the bottom line. Still trading at a PEG of 2. PEG of 2 is not expensive, but then the re-rating is not possible unless growth starts seeing an uptick, and we don't really see that happening on such a large base. Given all those factors, have been, and I continue to remain negative. I don't see funds suddenly saying, let's change our stance to positive from neutral or underweight. I think it's still going to be a wait and watch policy. This is just a bounce up and may even be used as an opportunity to sell by some people.
You obviously have one view to it. I'm just trying to play devil's advocate here. Over the many decades, we've seen IT stocks being written off multiple times. Obviously, when valuations are most attractive and when some of these stocks are most written off, is the best time to probably buy them. Do you believe that maybe this could be one such situation despite you not participating in such an opportunity if it were the case?
So there's always, when you look back in the rearview mirror, it's easy to say whether you were right or wrong. But look, the call that we are making is, yes, IT has always bounced back nicely, but there's been a drastic change in that what is happening. With the AI tools coming into picture, Indian companies have not been able to be at the same level that some of the international companies have been when it comes to developing tools for these companies. And if AI keeps accelerating, I think the companies in India need to probably reshape and redo how they're doing their businesses, right? So that is not going to be an easy transition. Two, we've seen in the past that yes, IT companies have bounced back, but if you notice over time, valuation multiples have always come off. So let's go back to 2001, where companies used to trade at 100 times price to earning because growth was 100%. So they were trading at 1-time PEG. Then growth obviously came off. Stocks took a while to recover. I think in TCS after the 2001 fall, I think not TCS, Infosys after the 2001 fall only recovered to its lifetime high in 2000. I think it was 9 or 8 or 9. I'm not even exactly sure. But it took so many years for it to come back. But the PE multiple was low. I'm not saying that IT companies are dead. I'm saying these companies are great cash generating units. So if you're someone who's happy with dividends, if you're happy with a moderate return on your earnings, on your investments, maybe at 8 to 12%, IT is a no-brainer for the simple reason your dividends will make sure that you get your return. But the point is we are investing in the equity markets to get a return of 15%, and I don't see the PE multiples expanding. And if PE multiples are not expanding and growth is not there, then what is going to drive the stock up? So can I be proved wrong? 100%. Market has a tendency to prove everybody wrong. But the point I'm making is if I had to base my judgment on what I see in earnings, in what I see in growth, and what I see other sectors probably doing, I don't see IT being able to generate the same returns that maybe some other sectors and stocks in the market can do. So from that perspective, I'm choosing to avoid IT.
That's quite a comprehensive view, Samir, on the entire IT pack. Now, on the back of this entire GST, the GST reforms that are going to come into play that's going on, FADA has written, the entire association has written requesting, instead of bringing out the GST reforms during Diwali, to prepone those reforms, and that's because Q2 will be impacted for them because people will now be delaying their buying of cars, and that similar trend is observed in the consumer durable space also. We spoke to B. Thiagarajan also, and he said the same thing, that Q2 will be impacted because people might delay buying of big things, and cars and consumer durables probably are the two big things that will get impacted. And that's something that the FADA union has written to the government saying and requested if they can prepone the GST reforms announcement.
Yeah, so I think there are two things out here. One, our team in Delhi, the bureau in Delhi, Shrimi and team have have just today mentioned that there's a very high probability that the rates might come into effect September 22nd. It still impacts Q2, but working with an assumption that there are 15 days of a start period before that, where demand is typically low, not zero, but typically low, that might work in the favor. But there is also a very wide speculation that if the council meet happens on the 3rd and 4th of September, then does it come into effect immediately post that? Because that's how typically past duties have taken shape. So remains to be seen. Based on the information available today, the worst case scenario is September 22nd. The best case scenario is slightly earlier. But even if it's 22nd, I dare say, because there is the Shraddh period of 15 days out there, maybe the damage will not be as high as one would have thought otherwise.
And maybe the recovery thereafter could be sharper. But of course, the call from FADA seems to be justified, because you'll have almost a month where you'll have a very, very lean period.
But the other way to think of it is just very, very quickly is that, as the team City was telling us, right, that if you or Mahim are wanting to buy a car, you are postponing the decision, not cancelling it.
Yeah.
And Blue Star, so car is different and consumer durable is different, but Blue Star said that if there is a demand pump up post the GST cuts, we are very equipped to supply all of that. So I don't think that will be an issue.
Yeah, just the inventory levels might be an issue, and
that's the only thing.
Just a month of pain point that both these industries will probably face. In fact, we also spoke to Saharsh Damani, CEO of FADA, about this. Listen to what he had to say.
We are entering the festive period in next 4 to 5 days, with Onam coming up in Kerala and Ganesh Chaturthi in the western part of the country. As we have released in last month's press release, when we did the July auto retail numbers, industry was sitting on 55 to 57 days of inventory, which is almost 2 months of inventory in hand at this point of time. And as you know, festivals is a big period for automobile industry, and dealers generally keep a higher inventory at their disposal. Now, with the announcement coming on 15th of August by the Honorable Prime Minister, we have seen that even though inquiry and walk-ins have been extremely healthy, the conversion rates from inquiry to booking, that has taken a slight hit. And we are thinking that because of this, because of the new rate information which will come out very soon, and as per today's news, by 22nd of September.
Okay, so that's of course the take coming in from FADA. Samir, your take with regard to a couple of these auto counters which have really zoomed in trade. Is this going to be in your opinion, a demand which will be subdued in the short term but will recover pretty much fully and maybe even get fresh legs if at all the GST rates are rejigged, and even if it's rejigged maybe a month from now?
I love the optimism that you all have on a lot of things, right? Trying to make sure that something goes in a particular way. So let's be honest. So when we first spoke immediately to your channel as well, I think Mahima was there on the show. I talked about the fact that delay of these purchases is going to happen, which is going to affect you too. I also remember discussing at that point that let us assume that you are planning on buying one car, right? You will postpone it, and yes, you will buy it post the reforms, whether it's 3rd or whether it's 27th or whenever the GST cut happens. Are you going to say because of a 10% or 12% cut in GST, you're going to go out and buy a second car? No, you're not. So are you saying that demand is suddenly going to accelerate because GST has been cut by 10% and your cost of your car is probably lower by 10%? No, I'm not going to do that. So to assume that just this tax cut of GST is going to drive consumption, I think that is being a little too optimistic. Yes, what can happen is maybe over time, maybe over the next year to 2 years, people could, if affordability is there, economy is doing well, consumption boost happens, then probably an uptick is going to happen. Am I expecting it to happen this year itself? Is suddenly everyone going to buy 2 ACs instead of 1 AC, or 5 ACs instead of 4 ACs? I don't see that kind of jump happening, because in your house, you have space for 1 fridge. You don't need 2 fridges, or you don't need 2 air conditioners in your bedroom. You only need 1. You're not going to increase their consumption. So I don't see this as a game changer over the near term. Over the long term, yes, it can be a beneficiary thing. But don't be so optimistic that everything is going to be hunky-dory the minute the cut happens.
Right. Okay. All right. So that's with regards to where Samir's view on consumption stands. But sticking to that consumption theme and GST theme, the one stock that's been buzzing in trade today is Jubilant Foodworks, and we've chosen this as a candidate for bull versus bear because there's a lot of optimism around the QSR, especially Jubilant being a preferred pick by a lot of brokerages as well. Let's try to take a deeper look as to what the bull versus bear case stands for this particular counter. Well, in Q1 itself, the margins that is gross margins for this particular counter were down by 200 basis points, largely led by promotional efforts. Now this could probably be offset by the new GST reform that will change in terms of the raw materials that they use, will reduce from 12% to 5% and will aid their gross margins. So that's the first point with regards to where gross margin stands. The next one is growth. In terms of where growth stands, revenue growth continues to be strong for Jubilant FoodWorks, and this is as compared to peers as well. Even in terms of the same store sales growth, that's been in double digit for the past 2 quarters for Jubilant FoodWorks versus its peers. But the growth for the 2 counters, that is Popeye as well as the turkey business, still remains uncertain. So they'll have to improve their operational metrics as well as their growth in terms of where both of these segments stands. The next one is then margins. EBITDA margins have improved and expanded by around 42 basis points in Q1. But management has said that going forward, their focus will be on growth versus margin. So management right now is not prioritizing any kind of margin expansion over growth. Their focus right now is both in terms of transaction as well as expansion, where growth comes into picture. Lastly, in terms of where international business stands, Sri Lanka did very well for them in Q1, 42% growth on YOY basis. But Bangladesh is still a pain point where the growth was merely 4%. Lastly, in terms of where ANR stands for this counter, well, right now in terms of where Bloomberg consensus are concerned, there are 16 buy calls, 9 hold calls and 7 sell calls for Jubilant, with a potential upside of around 11%. So this is the holistic view of a bull versus bear case as to where Jubilant FoodWorks stands. Heyman, I'll quickly come to you on this one. What are the charts indicating for something like a Jubilant?
I'm oversold, downside limited, short-term bottom in place, volume action positive, 620 support was seemed over at least from a shorter-term point of view.
Okay, thank you, Heyman. Thank you, Samir, for joining us. We'll let you both go on that note. And viewers, we'll slip into a very, very short break on the other side. We'll continue to take views coming in from guests, and we'll get you the BTST call for the day as well. Stay with us.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up.
Right, back with India market close right here on NDTV Profit. The IT index too is off from the highs of the day, but you would expect some bit of profit booking. I mean, it's still 2.43% high. You can't crib about this, right, per se. 0.5% for the Sensex and the Nifty as well. The global markets are also okay today, so no big shakes, if you will. Select names are kind of doing okay. Now, Heyman, just before we get to our guests, I just want to first get in my colleague Vansh, who joins in to talk about the list of a few key stocks that make it to his radar for this afternoon. Vansh, what's on your list?
So let me start off with Mazgaon Dock. Now the company, now the center has given clearance to the Defense Ministry and the company to begin negotiations for a 70,000 crore deal to buy 6 P-75 submarines. Now the project is in consortium with Germany's Marine Limited. Now the company is responsible for construction and delivery of 6 submarines, and the order book positions of the company stood at 32,200 odd crores as of March 2025. So clearly this one is on my radar. Second on my list is Dr. Agarwal High Hospital. Now there is a board meeting on 27th of August to consider proposal to raise funds. Now they plan to raise about 70 odd crores, and the fundraise is to be equity shares to its promoter Dr. Agarwal Healthcare Limited. So clearly the fundraise is to issue shares to the promoter Dr. Agarwal Healthcare. Thirdly on my list is Bharat Bijli. Now the company has approved transformer capacity addition for additional capex of about 65 odd crores. Now the company is aiming to increase its transformer capacity at Navi Mumbai factory to 35,000 MVA from the 28,000 MVA. Now this is a strategic move by the company to cater to its growing demand for transformers. So these are some of the stocks that are on my radar.
Okay. Thanks a lot for that. Bharat Bijli is up 5. Mazgaon is up about a couple of percentage points as well. On that note, Bhavin Mehta of Daulat Capital is with us today. And Bhavin, good having you. Thanks for joining in. Before we talk about the index at large, some of the defense names, Bhavin, because I think we've had, and of course, Piyush Pandey Johnson, of course, of ICICI Direct as well. And thank you to both of you. But Bhavin, I'll start off with you. The defense names, the spate of ordering activity has really gone up, right? We saw post-Operation Sindoor, large ones, then some more. Is it showing on the charts?
Thank you. So if we look at last couple of trading session, definitely we have seen good amount of action on the defense side of the market. However, a few stocks on our radar that has been consistently witnessing some amount of supply at higher level. So if you look at something like Hindustan Aeronautics, Bharat Electronics and Trade today, we are looking at supply at higher levels, and even earlier, wherein we used to see kind of a positive news flow, used to see these counters moving up by 3-4%. That pace of momentum has reduced significantly. So what we are waiting for right now is some amount of either a consolidation to take place before witnessing any major move on the upside or a breakout. So majority of these stocks have now started to at least trade below 20-day EMA, which was not the case previously. Our sense is that till the time it does not cross that level, the pain remains. Higher levels are looked as an opportunity to trim some amount of position. And till the time there is no significant consolidation, the move could be slightly on a negative side for these names.
Bhavin, what about your view on the Nifty 50 and the Bank Nifty?
Yeah, coming to Nifty 50, we believe, so if you look at rolls data, this time around rolls are slightly lower versus average, 3-month average, what we usually see. At the same time, we believe that these indices are now trading above short-term average. So if you look at Nifty, clearly quoting about 24,845 kind of a level, which is your short-term average for the index. We have seen good amount of move in today's trade led by something like IT as a sectoral indices. Our sense is that this implies if we cross and close about 25,000, we are again moving to that level of 25,200. But it would be very, very crucial for markets to close about 25,200 for any major move on the upside.
And what about your top picks for the day, Bhavin?
Yeah, coming to our stock ideas, what we are looking at is one, if you look at Shriram Housing Finance, we have seen a very decent consolidation in this stock around level of 620, 621. Our sense is that stock is placed for a move closer to 650, 660 on upside. Recommend long on with the stop loss of 605. Second trade idea is for Varun Beverage. This stock is, in fact, if you look at yesterday's move as well, the Friday's move as well, what we have seen is a very decent reversal from lower level of about 505 to 510. We are anticipating this stock to eventually move closer to 540, 550 on upside. Keep a strict stop loss of 500 on the downside.
Okay, Pankaj Pandey joining us as well. Pankaj, what's the take with regard to defense? And Mazgaon Dock, of course, one of those in focus on the back of that huge order if it were to come through, 70,000 crore. You believe fundamentally, does that change your view if you had one with regard to a Mazagon Dock and defense as a whole? Give us that perspective.
Yeah, hi, good afternoon. Thanks for having me. I think on the overall defense pack, we've seen a bit of a time and as well as price correction. Our view on defense is quite constructive. I think our sense is that with acceptance of necessity given to about 11.5 lakh worth kind of a project, in the next 2-3 years, we would expect ordering or tendering of nearly or 3-4 years ordering and tendering to the tune of about 5 to 7 lakh crore. Now, coming to Mazagon Dock, I think we have a target price of 3,160. I think what we are clearly liking is that in the next 18-24 months, besides this 6 P-75I submarines, there could be a possibility of another 3 more Kalaveri kind of a submarines, which could get ordered. So their order book can easily sort of go up in excess of 2 lakh crore, which again is a pretty good visibility. So mid-teen kind of a top line, bottom line growth, our sense is very much is possible, and which is why we like. And even for a company like HAL, I think it was sitting on 6-time order book to bill ratio, and with recent order, it's sitting on about 8 times. And there also our sense is that while last 2 years execution has been sort of missing, but overall sense is that going forward, the subsequent quarters, the execution is expected to pick up. In fact, if you sort of look at any kind of a defense name, largely order book to bill is somewhere in the range of about 5 times. And I think we have seen while the valuations have been rich earlier, but our sense is that the visibility, there is no dent in the overall visibility. So I think bit of a time and price correction post that we would expect this sector again to sort of hog the limelight.
Okay, all right. So that's with regards to where this defense pack is concerned. But the other pack of stocks that are buzzing in trade today is paper stocks. And this is after the government that has set a minimum import price for select paper boards. Anushi joins us with more details on that.
You know, it's a strong notification that has come from Ministry of Commerce, and that's why we're looking at the stock impact on a couple of these paper names. Just to pull out some of the names wherein we are seeing majority of this impact includes the likes of JK Paper, West Coast Paper, as well as something like Andhra Paper as well. We are seeing gains of around 12 to 15% of each of these counters if we look at the intraday high levels. And this is with high trading volumes that we are looking at. In fact, if we just look at JK Paper, 23 times its volumes compared to 30-day average. Even the other two counters, we are seeing about 7 to 8 times of higher volumes in comparison with what the 1-month averages are. Now, what is the key reason for this buzz? Now, what has happened is that government has now imposed a minimum import price in terms of where the virgin multi-layer paper board is concerned. And this contains about a minimum import price of 67,000 per MT is what we are looking at. This is an interest for the domestic paper manufacturers to save for better pricing power over here for the domestic manufacturers, as well as to save some margins as well. This is again in line with the government's move to safeguard these companies from cheap imports that are taking place. So some curbs over here have been imposed on that, and that's why we are looking at the strong buzz in a couple of these counters.
Right, Anushi, thank you so much for breaking that down for us. Strong buzz for sure. JK Paper, West Coast Paper, as well as Andhra Paper. A lot of these counters buzzing in trade today. Bhavin, I'll come to you on this one. Any view on the charts for something like a JK Paper or West Coast Paper? What are you seeing? What is the support and resistance that you're observing?
So if we look at something like Andhra Paper, we have a clear supply zone around level of 88, 89. Believe that if that level is broken out, move could extend up to level of 104, 105, but it needs to close above that level of 89. As far as West Coast Paper is concerned, it is at a clear supply zone. I think the volumes today has been significantly higher. High probability that it will move above that particular range of 575, 580. If that happens, that could be fresh trigger on the upside, possibly towards level of 635 on technical fronts. Also on West Coast Paper, the consolidation at lower end below 500 has been significantly higher. So believe that now 520 to 525 range should act as a very strong support on this particular name. That's all.
Okay. 14% higher. But you know, papers is such a small subject per se, that it becomes difficult to really call in big changes there and have a lot of people participate. What is rather easier, even though it's a smaller sector, is aviation. And Pankaj, I want to bring you in here on Interglobe Aviation. I trust you have coverage there, do you?
We don't have Neeraj.
Or you don't have coverage there. Okay, nothing in aviation or airports, is it?
So got only one stock, and then I think SpiceJet is still
No,
sort of
so
struggling.
no airport stocks either. GMR or, okay, fair call. Okay, in which case, Bhavin, can I ask you, a lot of expectations because the numbers were good. Now it's going to be a part of the Nifty as well. But somehow Interglobe is, after 6,000, is kind of losing the zing. You know, I mean, can it break out? What levels would you watch out for when you're looking at Interglobe Aviation?
Yeah, so definitely what we have seen over last 1.5 year is that whenever the deviation of more than 5% occurs on the interglobe aviation, we have seen a mean reversal kind of theme playing out in this particular counter. Now, a couple of days back, the stock moved to a high of close to about 6,200. Its short-term average was close to about 5,900. We have again seen some amount of consolidation that is helping averages to move higher. Our sense is that, possibly this stock is placed for a very strong move on upside. Add to that, we have a festive season ahead, which ideally should be a driver. Historically, that has been the case that whenever there has been a festival season, we have seen a very strong move in majority of this name. So I believe that high probability of a potential breakout above 6,200. If that happens, a move towards level of 6,450, 6,500 then cannot be ruled out. At the same time, on downside, we have a very strong base around level of 6,000. My sense is that anything towards level of 6,000 one should look to accumulate, or probably above level of 6,200. View continues to remain very positive on this particular name. If you want me to cover GMR Airport, against extremely ranged trade here, we are looking at a range trade between level of 82 on the downside to somewhere around 90 to 93 level. It needs to break out above this zone, before it gets into that momentum phase that we are all waiting for. So 92 will be the crucial level for this stock to break out.
What about Pankaj? What about some of the hospitality counters? And I talk specifically on ITC hotels. You had one brokerage come out and actually give it an unfavorable rating, if I can call it that. 12% downside is what they say. They believe valuations have run up. Your sense?
So on the hospitality, our sense is that we like the entire spectrum. So we have premium hotels like, say, Indian hotels, which we like. Beside that, ITC is another pick, which we continue to sort of like. ITC hotel, I meant. And on top of it, chalet and even lemon tree is something which we like. So we like the entire pack. Our sense is that the demand will continue to grow at 9%. Supply at best is going to grow at 5%. And in case if there is some delay, then supply is going to be even more lower. So which means that your occupancy rates and even the ARRs would remain elevated levels. Valuations are on a higher side, but we don't see any dent to the overall growth. So from that perspective, I think this space looks quite better to us from a portfolio perspective.
Do you have a view? Bhavin, do you have a view?
Yeah, so coming to hotels, Lemon Tree this particular month has witnessed a very strong move. Sense is that there is a potential for a strong move on upside. The stock after 2024 May, it has broken that zone of 153. Sense is that move towards level of 175 to 180 very much probable on this stock. As far as Indian hotel is concerned, there is a very strong support around level of 775. If that stock drops another 810 INR from current level, sense is one should look to accumulate with the stop loss of 765 for a potential move towards level of 810 to 820 in an immediate term.
Okay, all right. So that's the view with regards to where the hospitality space is concerned. But on to our brokerage call for the day. Jefferies has upgraded Divi Laboratories to a buy, and Varsha is standing by with more details on the rationale. Varsha, what are you picking up?
Well, thank you so much for that. You know, Jefferies has come out with a note on CRDMO sector, wherein they say that Divi has a huge opportunity because CRDMO, that sector is at an inflection point. What they say that Divi's has evolved from being a chemical manufacturer to a strategic global partner, and Divi's will benefit from China Plus One strategy, wherein global pharmaceutical companies are diversifying their supply chain to India, wherein Divi's will have a huge opportunity. The other growth that Divi's has is of course the GLP, that is anti-diabetic and anti-obesity products that are in the pipeline, and Divi's is going big on that, and Jefferies is also betting on Divi's for that. Also Divi's has the other growth opportunities. One is of course the growth will be led by custom synthesis, wherein Divi's has a huge volume over there, and also their generic portfolio, the growth will also come from the generic portfolio that the company has. Overall, Jefferies is actually betting on their generic portfolio, their custom synthesis projects, and of course the GLP products that the company is into, and because of that they have came out with a CAGR revenue growth of almost 14% sales growth, and of course 20% EBITDA growth over the next 3 years.
Okay, Varsha, thank you so much for giving us those details. Pankaj, with respect to where Divi stands, would you also kind of agree with the view that Jefferies has, and if yes, what is the target price that you would give to something like a Divi's?
On Divi's, target price is 6,700. We continue to like, I think this company has been at the forefront from a CDMO perspective, and we continue to sort of like the business. Probably last quarter, there was some pressure on the generic side of the business, but I think custom synthesis continues to sort of do well. Company has been undertaking a regular amount of capex, and I think next few years, again, you have capex lined up of about 650 to 700 odd crores. So I think, except for generics being slightly under margin pressure, I think most of the things are in place for this company to sort of do well. And so nothing changes from a overall structural positive perspective which we are carrying on this stock.
Okay, all right. So that's the view with regards to where Divi stands. Bhavin, your quick view on Divi's with regards to where charts are concerned?
Yeah, so what we've seen in pharma sector is there are a lot of news flow from US that continues to impact this particular sector depending on the news flow. So we do not have a very constructive view per se. We will wait for some development. However, as far as Divi's is concerned, 50 DEM at 63.80 remains a very crucial level for the stock. The stock needs to close above this particular mark for any fresh momentum on upside. Till that time, on downside, watch out for 5,900 to 6,000 as a kind of a key technical support level for this counter.
Okay, all right. Bhavin, the other counter that's been buzzing in volumes as well as the kind of uptick that we've seen in the counter, up 7% now as we speak almost, that's Safari Industries. Any view on the charts there?
If we look at the development on Safari industry, we have seen a very strong supply over last couple of months around level of 2,300. The stock over and over again has seen a very sharp spike in an intraday trades wherein multiple times stock has moved closer to 2,250, 2,300 range and witnessed a reversal. So I think wait for one more trading session. Let the stock move past level of 2,300 for any fresh long ideas. But as long as that level is not crossed on downside, the stock has historically taken support in the range of 1,900 to 2,000. That should be retested as far as it does not cross that level of 2,300.
Bhavin, BTST for today?
Yeah, so if we look at stock of Bajaj Finance, this has seen a good amount of development, good amount of strength in trade today. Sense is that stock ideally should move closer to level of 915 to 920 possibly by tomorrow. Stock is currently trading around 900, 901 range. On the downside, 892 should be your stop loss for any long position.
Do you like Bajaj Finance, Pankaj?
Oh yes, I think our sense is that Bajaj Finance will continue to deliver 25, 26 kind of AUM growth, will maintain ROAs of 4% and around similar price to adjusted book value multiples. I think one of the key beneficiaries of GST rate realignment will be Bajaj Finance also, because a lot of these consumption categories could get a good amount of push, and which is why I think Bajaj Finance within NBFCs is looking quite attractive to us.
Okay. All right. The other counter that's been buzzing in trade today is R Systems, that's acquired Novigo for a 400 crore deal. And we had a conversation with the CEO, Mr. Ritesh Bansal, on what is he eyeing with this deal and how big is this going to be as a disruptor in the market. Listen in.
The way we are seeing it is AI has been a bigger disruptor and revolution than anything else we've seen in the recent past. And the budgets and the overall adoption is moving at a speed at which it is difficult for every organization to catch up. With the synergies that we bring together, not only will we be bringing a lot of that capability to our existing clients, but it is going to help us capture new market in a very differentiated manner. So not only do we see that it should, as a combined entity, give us the ability to post, market leading growths as we go forward, but more importantly, it should also be deepening our wallet share with our existing clients as they're spending more in those areas.
All right, Pankaj, any view on R Systems?
No, we don't have a view on our systems, but overall IT, we are quite selective. I think Coforge, which is trading somewhere about forward basis 35 times, and Persistent somewhere about 41 times, are relatively attractive to us. So besides that, Newgen is another stock what we like. But in general, I think while in IT, overall order wins have been good, but conversion to revenue is still sort of needs to happen. And I'm not too sure even next quarter we'll have that confidence to sort of say that. So one needs to be very selective in IT. Again, perspective on US market is a big question mark.
Okay. All right. So, well, that's the take coming in on IT. But I want to also quickly try and cover some stocks which have been buzzers today in trade. And within that pack, you obviously had a lot of the paper stocks, but outside of that, you had something like an Eclerx, a Godfrey Phillips. Bhavin, any of these names on your list? And what should traders do at this point with some of these names? Because some moves seen.
Yes, so today we have seen a very good amount of strength in IT. We have a couple of stocks on our radar. Eclerx definitely is one of them. We have seen good amount of strength, and in fact, if you look at versus rest of the IT peer, this stock has outperformed big time versus majority of IT peers. Having said this, the stock is also breaking the crucial level above level of 41.20. Sense is that as far as this level, the stock manages to close above this level of 41.20. High probability of a move towards level of 4400 next. So remain constructive as long as this range is maintained. Overall, continue to be positive for this name. And also from rest of the spec, we are looking at something like Infosys, Wipro, wherein good amount of shorts are being observed. If we see a kind of unwinding of shorts, there could be a continuation of current momentum. So overall, for a short-term trading perspective, IT could be on radar over next couple of trading sessions.
Pankaj, your take on IT?
So I just mentioned that, see, in general, overall tier 1 IT names have continued to sort of give very weaker guidance. Tier 2s have been relatively better placed. And there we like Coforge and Persistent. But overall sense is that even next quarter also it's a bit challenging to sort of say that a lot of these deal wins will start getting converted to revenues. Given the uncertainty which is there in the US market. So somewhere down the line, I think IT, we need to see follow-up happening because see, while we have seen decent amount of time and price correction, I am not too sure whether we are going to see a similar follow-up. So not a level to sell, but again, difficult to say that things have improved for the sector to sort of lap it up in a big way.
There's some stocks which are flying around, I think, in the last few minutes of trade. So Imagica is one which has had a zoom up in trade, so should bring up that one right there, the spike. I think it's dying as well, actually. But yeah, it's certainly a stock that moved up higher in trade in the last few minutes. And there is also Apollo Micro, which by virtue of the move done in the last few minutes has hit a fresh high. Right there, look at that buzzing, and look at the volumes there on that stock. Over nearly 6 crore shares traded on a single exchange in Apollo Micro. So really sharp up move higher. Bhavin, any luck? Any thoughts? Apollo Micro, Imagica?
So if you look at Apollo Microsystem, last 2 days, very strong volumes, very strong price action. The stock has also broken above level of 215. That was a very crucial resistance. However, given the kind of move that we have seen in last 2 days, I think one should wait for some amount of consolidation before getting into this counter. As far as Imagica is concerned, we are consistently seeing a supply at higher level. Really not sure today's move, but again, it seems to be drifting lower. Sense is that as far as that level of 60, 62 on closing basis is not crossed, higher level should continue to act as a supply for Imagica per se.
I wonder, Pankaj, 124, 125 times, so it's not a cheap stock. And yet people are buying it and taking it to new highs, Apollo Micro.
So I think, Neeraj, we need to sort of see some of the stocks not from the near-term earnings perspective. So, for example, we have something like Azad. So that stock, again, our sense is that will continue to deliver 35% plus kind of a growth. But yes, valuation current looks cheaper. But I think a lot of this is going to sort of unfold, say, probably 2 years, 3 years down the line. So I think sustainability of growth becomes a key thing, and which is why you can't really look all the defense stock from a P multiple perspective, because a lot of these stocks hold good amount of niche capabilities which can be replicated. I'm not too sure about Apollo Microsystem, but we cover some of these names. So even Dynamic Technologies, their air division is sort of doing very well. So similarly for Azad. So I think similarly Astra Microwave, again on the radar side, our sense is that can do very well. Data Pattern is another stock. So some of these names are niche. Solar Industries, you really do not have a parallel for this, and which is why I trade somewhere about 65 times on FY27 basis. So you can't really compare some of these names with or evaluate just P multiple basis.
Okay, Pankaj, Bhavin, thank you so much for giving us those insights and taking out the time and speaking with us at NDTV Profit. We're a minute away from market closing. Let's take a look as to how markets have fared throughout the day. The Nifty 50, let's try to pull that up. Up by about 0.4%, of course, off from its day's high point, but and also down from that 25,000 levels, trading around 24,977. With regards to where Bank Nifty is concerned, closing almost flat there, hovering around that 55,100 odd levels. Let's try to pull up the Nifty heat map. IT continues to lead that chart. Infosys, TCS, HCL Tech, Wipro, all leading the pack with about 2 to 3% of gains. Some counters like Hindalco, Indocent, Coal India, as well as Tech Mahindra and Hero MotoCorp and Eicher Motors are also the top gainers and did well in trade today. But something that's been under pressure today, some names like Nestle, Asian Paints, BEL, SBI Life, as well as ICICI Bank, some counters in the red. Let's try to pull up the sectoral heat map. Nifty IT leading the pack, followed by Nifty Realty and Nifty Metal, both seeing gains of about 0.7 odd percent. Nifty Consumer Durable also fairly doing well. Nifty Auto, Nifty Pharma also up about 0.4, 0.3 odd percent. But something that's not done very well today is Nifty Media, down by about 1.9%. PSU Banks in the red, down by about 0.3%. Nifty Defense also seeing some profit booking, down by about 0.3% there. Let's try to pull up the broader markets and see how broader markets have done. Well, the mid-cap 150 is closing in the red, down by about 0.08%. So benchmarks have outperformed the broader markets today. The small cap 250 closing largely flat at its day's low point. Let's try to pull up the BSE 500 and see how the counters have fared in the broader end of spectrum. JK Paper, a lot of paper names in fact, JK Paper, West Coast Paper, a lot of those names did very well. JK Paper closing 16% higher, followed by eClerx, Vodafone Idea, Mastek, Jubilant Foodworks and HLE Glasscoat. Significant run up for HLE Glasscoat specifically. Some counters that did see a lot of selling pressure today includes Imami, CSB Bank, KRBL as well as Pfizer and Delta Corp down by about 3 to 4%. Let's also try to see as to what are the factors that you'll go out and watch out for today post market hours, and what could those factors be. Let's try to pull that up. Some corporate actions there, trading ex-dividend. Vedanta will be a big one to watch out for. JBM Auto, Imami Paper Mills also, all these counters will be trading ex-dividend. Bonus issues, Karur Vysya Bank and HDFC Bank. Here the ratio is 1:5 where Karur Vysya Bank is concerned, and HDFC Bank 1:1. In terms of where listings are concerned tomorrow, a lot of IPOs that opened last week will see listings tomorrow. Patel Retail, Vikram Solar, Gem Aromatics and Shriji Shipping Global, with Vikram Solar seeing exceptional subscription as well. In terms of the IPO opening tomorrow, there is Anlon Healthcare that opens for subscription tomorrow. It's a small IPO of around 177 odd crores, but that opens tomorrow and closes on 29th of August. Vikran Engineering will also open for subscription tomorrow and close on 29th of August. It's an EPC company mainly into water infrastructure and EPC engineering. In terms of the MSCI index rejig that we're expecting tomorrow, exclusions include counters like Sona, BLW and Thermax. On the other side, the weight up includes counters like CG Power, and in terms of where weighing down is concerned, counters like Eternal, Asian Plains, JSPL and Havells we will see outflows in terms of where weightage is concerned. So this is with regards to everything that you need to keep an eye on post market hours today. But with that, we're completely out of time on this edition of India Market Close, but lots lined up on the other side, so do stay tuned.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict,
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. Viewers, benchmark indices recovered from initial hour losses to end trading near their intraday highs. While the Nifty 50 wrapped up just shy of 25,000 levels, the 30-pack Sensex sustained above 81,000 levels. IT heavyweights like Infosys, TCS and HCL Tech uplifted the Nifty by the highest number of points. On the contrary, banking majors like the ICICI and HDFC dragged down the index. Selling pressure pushed down the broader markets, thereby underperforming the benchmarks. The sectoral picture looked mixed with almost equal losers and gainers. IT was the biggest gainer of the day, followed by realty and metal. On the other hand, media, PSU, bank and defense emerged as the top three sectoral laggards. The overall market breadth ended skewed in favor of the bears. Citi predicts a third year of slow growth for Indian IT in FY26. The slowdown stems from the multiple factors, not just economic issues. AI spending rises, but IT services see limited benefits. Growth and margins also face challenges, with caution advised for investors. The brokerage house prefers Infosys, HCL Tech, Hexaware and Emphasis, and that also makes it the sector of the day. Kotak reports moderate progress in the Gen AI landscape for IT services. AI agents will drive 2 to 3% annual revenue deflation over the next 3 years. Software development is a key AI focus, but mainstream adoption is unlikely soon. Persistent, Coforge and Hexaware are well placed, while HCL Tech faces lower risk than Tech Mahindra. MOSL recommends buying KPIT Tech with the target price of 1600 rupees. It advises selling Tata Tech and Tata Elxsi with targets of 580 rupees and 4600 rupees. KPIT benefits from growing vehicle software complexity. So Tata Tech and Tata Elxsi face challenges with lower margins and structural issues. Paper stocks surged with high trading volumes today. JK Paper, West Coast Paper and Andhra Paper saw sharp gains. The government set a minimum import price of 67,220 rupees per metric ton on virgin multi-layer paper board. Now this move shields domestic firms, boosting their pricing power and margins. Jefferies reports India's government is set to rationalize GST rates to boost consumption. Preparations are underway for potential US tariffs, with hopes for better ties. India-China relations are improving steadily. The government plans more reforms and expects further rate cuts without growth concerns. Global brokerage firm Jefferies has upgraded Divi's laboratories to buy from hold with a target price of 7,150 rupee. Now, this move is driven by the company's strong growth prospects, led by its custom synthesis segment. Divi's laboratories boast the best GLP-1 pipeline in Indian CRDMO and is well positioned to benefit from the China Plus One strategy. Now, the company's generics division is also showing signs of growth, with new launches expected to drive recovery. Jefferies predicts 14% sales and 20% EBITDA CAGR over FY25 to 28. Goldman Sachs keeps a neutral rating on TVS Motor, raising the target price to 3,430 rupees. Now, the new N-Torque 150 and electric two-wheeler launches are expected to boost the market share of TVS. Now, the rare earth metal shortage has eased for now. No upside from the potential GST change is also included yet. Mascot Dock has clearance to negotiate a 70,000 crore rupees deal for 6 P-75I submarines. Now, the project partners with Germany's Thysenk Rupp Marine. Now, Mascot Dock will build the submarines while Thysenk Rupp will handle the design. So, the deal will boost the Indian Navy with advanced submarines. Transrail Lighting secures 837 crore rupees in new transmission and distribution orders. FY26 order inflows reached 3,157 crore rupees, which is up 57% from last year. Now, orders include a major domestic deal and international product supply. The unexecuted order book also grows 44% to 14,654 crore rupees. Signpost India wins exclusive advertising rights for 67 key BMRCL metro stations. Now, the deal lasting until 2034 could generate 600 to 700 crore rupees in its revenue. So, it targets 3 crore monthly riders. This strengthens Signpost's national transit media portfolio as well. Yes Bank gets RBI approval for Sumitomo Mitsui Banking Corporation to buy a 20% stake. SMBC will now acquire shares from State Bank of India and other major banks. It may also purchase an additional 4.99% stake. The approval is valid for 1 year with no promoter status for SMBC. R Systems, an IT company specializing in AI and analytics, has acquired Novigo for 400 crore rupees. Now, Novigo, a profitable IT services firm, boosts the R Systems digital and product engineering capabilities. The acquisition, valued at 6 times Novigo's adjusted EBITDA, is also expected to enhance earnings from year one. It also expands R Systems' market reach to the Middle East and strengthens delivery in southern India. Rekha Jhunjhunwala exits Nazara Tech in June ahead of the online gaming bill. She sells her stake in tranches, earning 770 crore rupees with 4 times returns. Nazara shares plunged 19% in a week, erasing 1,700 crore rupees in investor wealth. The new gaming law hits Nazara's indirect exposure to real money gaming. UBS has maintained its neutral stance on Eicher Motors with a target price of 5,900 rupees. The brokerage firm expects Eicher's tax rate to drop to 18% from the current 28%, as most of its key brands, including Royal Enfield, have engine capacities below 350cc. Now, this change is likely to positively impact the company's profitability. However, UBS notes that the stock has been underperforming due to the ongoing GST confusion. Welspun Corp sells its entire stake in Nuan Shipyard. The company offloads its remaining 6.1% equity shares to Noyan Trading's Reliance subsidiary for 45.32 crore rupees. Now, last month, Welspun sells a 9.9% stake for 55 crore rupees. Now, this completes Welspun's exit from Noyan Shipyard. Seat OH Sri Lanka, a Seat firm, a Seat arm, signs $171 million investment pack with Sri Lanka's Board of Investment. Now, the deal, one of India's largest in Sri Lanka's manufacturing sector, boosts off-way highway tire and tracks production. Now, facilities in the Midigama and Kotugoda focus on export-led output. RBI Governor Malhotra expects minimal impact from US tariff on some sectors. The central bank has local currency agreements with 4 countries, reducing forex risk. Now, measures are in place to boost fund flows to NBFCs with more planned. The RBI is also prioritizing fintech growth, refining frameworks to support progress without obstacles. Fitch Ratings has affirmed India's credit rating at BBB- with a stable outlook. So the rating is supported by India's robust growth and solid external finances. Fitch forecasts India's GDP growth at 6.5% for FY26, which is driven by solid demand, government capex, and private consumption. However, US tariff pose a moderate downside risk to India's growth forecast. Fitch also notes that lagging structural metrics constrain India's rating. So proposed GST reforms are expected to aid India's consumption and offset growth risks. The Federation of Automobile Dealers Association has urged the government to expedite the proposed GST rationalization reforms, with customers postponing car purchases in anticipation of a GST cut during the festive season. FADA has warned that delaying the reforms could actually turn the festive sales period into a whitewash. The association has requested that the GST Council meetings be held earlier and that the proposed lower GST rates on small cars be implemented before Diwali. NDTV Profit reviewed the letter. The GST Council is set to meet on September 3 to 4 in Delhi to discuss the centre's proposed two-slab tax structure. The new GST rates are likely to be implemented around September 22, coinciding with the start of Navratri. Now, this move is expected to boost the festive demand. Notifications for the new rates will be rolled out 5 to 7 days after the Council's decision. The proposed two-slab structure consists of 5% and 18% tax rates. Over 15,000 hospitals across North India will suspend cashless services for Bajaj Alliance general insurance policy holders starting September 1 of 2025. Now, this decision was made by Association of Healthcare Providers India, citing outdated reimbursement tariffs that have not kept pace with rising medical costs. Hospitals claim that Bajaj Alliance has refused to revise tariffs, instead pushing for further reductions. Policyholders will still be able to receive treatment at these hospitals, but will need to settle bills upfront and apply for reimbursement later. Quick service restaurant stocks like Restaurant Brands Asia, Jubilant Foodworks and Westlife are positioned to gain from the proposed GST reforms expected by Diwali 2025. Although the GST rate on QSR services remains at 5% with no input tax credit, lowering GST slabs on raw materials, which is like 10 to 45% falling under 12% GST, will now cut costs, boosting margins by 20 to 90 basis points across the key QSR players. Now, this structural reform aims to reduce the input cost without changing output tax rates, potentially improving profitability and investor sentiment for QSR companies amid a strong consumer demand environment. The Board of Control for Cricket in India, that is the BCCI, has ended its partnership with fantasy gaming platform Dream 11. Now, this is following the passage of the Promotion and Regulation of the Online Gaming Bill 2025. Now, this decision was confirmed by BCCI Secretary, who stated that the board will refrain from associating with similar organizations in the future. The partnership worth 358 crore rupees was set to run until 2026. With just weeks left before the Asia Cup, the BCCI is now racing against time to secure a new front of jersey sponsor. The government has reduced the minimum export price of natural honey from $2,000 per ton to $1,400 per ton effective immediately until December 31st of 2025. Now, this move announced by the Directorate General of Foreign Trade aims to boost the honey exports. The minimum export price was first introduced in March 2024 to regulate the export of natural honey. SpaceX postponed the 10th test flight of its Starship rocket on August 24 of 2025. Now, due to an issue with ground systems at its Texas launch site, the delay announced about 30 minutes before launch marks another setback for the massive vehicle, which has faced multiple explosive failures during previous flights earlier this year. SpaceX aims to reschedule the launches as soon as possible, with Monday, August 25 cleared as the next potential launch date. Now, the test flight is critical for SpaceX ambitions for deep space missions, including NASA's Lunar Artemis program, though significant engineering challenges still remain. OYO is gearing up for its initial public offering with plans to file its draft red herring prospectus in November. Now, the company is targeting a valuation of $7 to $8 billion, with sources indicating that the proposal will be placed before its board next week. So the IPO valuation is expected to be in the range of 25 to 30 times of the company's EBITDA, with a potential share price of around 70 rupees per share. SoftBank, one of OYO's largest shareholders, has engaged with several banks to assess the market sentiment and also gauge the interest in the IPO. A shocking update in the attack on Delhi Chief Minister Rekha Gupta. The prime accused Rajesh Khimji Sakaria, a 41-year-old from Rajkot, admitted to planning a knife attack during the public hearing on August 20, but abandoned it due to tight security. His accomplice, Tehseen Syed, was arrested for funding the plot. Both face attempt to murder charges. Delhi Chief Minister is now under Z category CRPF protection. With heavy to very heavy rain likely to continue on Monday and Tuesday in several parts of Rajasthan, the state government announced that schools across Jaipur and other districts will be closed as a precautionary measure. According to the Meteorological Centre, Jaipur, an orange alert for extremely heavy rainfall has been issued for Rajsamand, Sirohi and Udaipur districts for Monday, while a yellow alert warning of heavy rainfall has been sounded in about a dozen districts. The department noted the intense spell is likely to continue over the next 2 to 3 days. Travelling on the Delhi metro just got costlier as the DMRC announced its first fare hike since 2017, that is 8 years. Now, ticket prices have risen by 1 rupee to 4 rupee based on the distance, with the Airport Express line seeing a 5 rupee increase. The minimum fare is now 11 rupees and the maximum is 64 rupees. The DMRC cites rising operational costs, but commuters are frustrated, citing overcrowding and service issues. Smart card users still get a 10% discount. US President Donald Trump escalated tensions with Maryland Governor on August 24, threatening to deploy National Guard troops to Baltimore after Moore invited him for a safety walk to address the public safety. Now, Trump, via Truth Social, called Baltimore crime-ridden and referenced his DC deployment of 2,000 troops, now armed as last resort. Moore on CBS's Face the Nation criticized Trump's ignorant remarks, noting Baltimore's 24% homicide drop in 2024. Democrats, including Illinois' Pritzker, call the deployments an abuse of power. US media also reports 1,700 troops may deploy across 19 states, escalating concerns over militarized policing. Typhoon Kajiki struck southern China Island with strong winds and heavy rains on August 24 before heading towards Vietnam's central coast. Now, in response, China has evacuated around 20,000 people, while Vietnam ordered mass evacuations of over 5 lakh residents, closed schools and airports, and cancelled the flights. The typhoon, packing winds up to 166 km per hour, is expected to make a landfall in Vietnam's Thanh Va Aningay, bringing risk of flooding, landslides and storm surges. Vietnamese authorities deployed large military and paramilitary forces for evacuation and rescue operations as the region braces for the most powerful storm this year. Israeli airstrikes hit Nasser Hospital in Gaza today, killing at least 15 people, including 3 journalists, Palestinian health officials report. Now, among the dead was Reuters contractor Hussam al-Masri. A cameraman, another Reuters photographer, Hatem Khalid, was wounded. The Israeli military has not commented on the strikes, which targeted the hospital's 4th floor. This attack adds to the ongoing violence in Gaza, with over 240 journalists killed since October 2023. Kylian Mbappe was the star of the show as Real Madrid cruised to a 3-0 win over newly promoted Real Oviedo in La Liga. The French striker scored twice, with his first coming in the 37th minute, followed by an 83rd minute strike set up by Vinicius Jr., who sealed the victory with a stoppage time goal. Madrid's dominant performance keeps their perfect start under coach Xabi Alonso. Manchester United's winless streak persists after a draw at Fulham. Bruno Fernandes missed a crucial penalty. And despite Rodrigo Muniz own goal giving United the lead, Fulham's late equaliser secured a point. Meanwhile, Everton marked their new Bramley Moore Dock Stadium opening with a 8-2-0 victory over Brighton, powered by Grealish 2 assists. A heartbreaking tragedy has struck Jammu and Kashmir's cricket community. Young cricketer Farid Hussain from Poonch lost his life in a road accident on August 20. CCTV footages show that the 23-year-old colliding with a suddenly opened car door while riding his scooter. Despite being rushed to the hospital, he succumbed to his injuries. With that, viewers, it's a wrap on this edition of Market Express, but please stay tuned and don't go anywhere.
Pulling us into this country.
They argue, I conclude. They deflect, I drill down. This isn't a free-for-all. It's a reckoning. No filler, no fog. Only the facts and where they lead. Every night at 9, the case closes because the buck stops here.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict,
Benchmarks end higher with Nifty gaining 7 out of 8 trading sessions. Nifty IT outperforms the sectoral indices to finish more than 2% in the green. Nifty Media loses the most, broader markets underperform. The GST Council is expected to implement the revised tax slabs from September 22nd. Sources indicate that formal notifications will be issued within 5 to 7 days following the Council's meeting scheduled for September 3rd and 4th. And in the wake of the online gaming bill, real money gaming platforms diversify into new businesses. While Dream11 is preparing to enter financial services, Winzo launches a short video platform. And it's a setback for Bajaj Alliance Health Insurance's customers as the Association of Healthcare Providers advises its members in North India to stop cashless services for the insurer due to long-standing disputes. The Supreme Court pulls up stand-up comedian Samay Rana and others for jokes mocking persons with disabilities, says when you are commercializing speech, you cannot hurt the sentiments of a community. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Let's move on to our top focus this evening. It appears that festive season will arrive earlier this year with a likely GST rate cut around the 22nd of September. Prices of goods are likely to fall by 10%, giving shoppers a reason to splurge. Both online and offline retailers are jumping in early. Flipkart's Big Billion Days and Amazon's Great Indian Festival are scheduled mid-September, offering discounts of up to 80%. Meanwhile, Shoppers Stop, Nykaa and Myntra are already luring customers with special festive sales, while brands are pushing easy finance schemes and faster deliveries to cash in on the surging demand. From GST relief to bumper bargains, this Diwali is shaping up to be a festival of spending. And on that note, let's go across to my colleague Shrimi, who has more details on the rollout of the new GST rates.
Well, absolutely. Government is ready to roll out the new GST structure likely around September 22nd. And in fact, what we are picking up at this point that the GST Council meeting scheduled on September 3rd and 4th, they are going to deliberate on, of course, the two slab structure which Centre proposed. And there they are going to take a call and take decision on this massive restructuring of the indirect tax regime. And in fact, sources also hinting at that soon after the meeting gets over, they are putting out the notification in the span of 5 to 7 days, and perhaps they'll try to implement the new rates likely around September 22nd, and that couldn't be more deliberate, keeping in mind the festive season is kick-starting with Navratri, and in fact they are likely to sort of implement all rates so that it will have impact on boosting, of course, consumption and the overall festive demand. And as we have been reporting about it, that this two slab structure where a lot of essential item, paneer, ghee, etc., which is currently at the 12% bracket, is moving to 5%, and then your small cars, your aspirational goods, white goods, etc., which is currently at the 28%, is moving to 18%. Now, of course, the special rate 40%, where we could see the sin goods and the high-end cars and the high-end bikes, and that is something is also deliberate upon, and the decision would be taken on the future of compensation cells as well, because there are the states which are pitching for the additional levy in place of compensation as the regime nearing to an end. And in fact we are also learning that government may perhaps able to repay the debt much in advance, even before a quarter, by October to November. So the tax incidence, however, remains the same. So we will kind of see to how they are going to implement the new levy, with the Centre pushing for it, and whether it could be on the high-end car also, because earlier the cess was on the high-end cars as well as the all the tobacco related items. So this is going to be a very high-end packed agenda for the GST Council meeting, and both Centre and State perhaps will push for rolling out the new rate and the new structure by around September 22nd is what indication we are getting.
Thanks, Shrimi, for that. Meanwhile, the Federation of Automobile Dealers Association, also known as FADA, is calling on the government to fast-track the rollout of GST rationalization reforms, citing a slowdown in festive momentum. Now, according to FADA CEO Saharsh Damani, dealers have ramped up inventory ahead of Onam, anticipating strong demand, but are now witnessing a sharp drop in conversions, with customer inquiries not translating into bookings. But first, let's turn to my colleague Danish Anand, who's tracking the industry's push to advance the GST Council meeting, currently slated for September, as auto dealers hope for clarity and relief well before Diwali.
FADA India has written a letter to three key ministries, Finance Ministry, Commerce Ministry and the Heavy Industries Ministry, seeking the early implementation of the proposed norms. So like last week, the GOM on GST rate rationalization had met, and they had recommended that the GST of 28% that is currently applicable on small cars, that should be reduced to 18%. And similarly, GST on luxury vehicles would be charged at 40%. So basically, the GST Council will have to take the final call. But after this information has come out, the general public is now delaying their purchasing plans of cars, and the FADA has clearly said that this is creating some kind of pressure on the dealerships, as many people are just either postponing their bookings or they're waiting for the GST to come down. And the concern of FADA India is the fact that the festive period is at least 4 weeks away. So in the run-up to the festive season, the dealers anticipate like really slow sales, and hence they have sought early implementation of the proposed GST norms. The GST Council meeting is supposed to take place on 3rd to 4th September, and they're seeking that before the festive season, the reduced GST rates should be implemented so that they don't face any losses.
We are entering the festive period in next 4 to 5 days, with Onam coming up in Kerala and Ganesh Chaturthi in the western part of the country. As we have released in last month's press release, when we did the July auto retail numbers, industry was sitting on 55 to 57 days of inventory, which is almost 2 months of inventory in hand at this point of time. And as you know, festivals is a big period for automobile industry, and dealers generally keep a higher inventory at their disposal. Now, with the announcement coming on 15th of August by the Honorable Prime Minister, we have seen that even though inquiry and walk-ins have been extremely healthy, the conversion rates from inquiry to booking, that has taken a slight hit. And we are thinking that because of this, because of the new rate information which will come out very soon, and as per today's news, by 22nd of September.
Earlier today, we also sat down with Kuldeep Singh Rathi, Chairman and Managing Director of Ask Automotive, who shared his perspective on the upcoming GST 2.0 reforms. Now, he sees the new framework as a catalyst for growth in the auto sector, offering a much-needed boost to efficiency and competitiveness. Here's what he had to say.
The two-wheeler sector has not even touched the volumes that it touched in 18-19. After that, COVID came and the other after effects came, and then the BS4, BS6, and the prices kept on increasing for the common man. And the two-wheeler, which used to be about 65,000, is now nothing is available less than 90,000 rupees. So there has been not a healthy demand, and as you know that in the quarter one also, our two-wheeler sector grew only by 0.7%. But this GST is such a wonderful news, and I'm an optimist, and I feel that this financial year itself, we will be able to cross in the two-wheelers the last highest numbers of 18-19. That's one part. So all of us who are supplying to the two-wheelers are going to gain extremely because of the higher volumes, number one. Number two, our parts, luckily or unluckily, whatever initially they were all being 28%. So now all those parts which we supply to the independent aftermarket, which is also a very big revenue for us, amounting to 400 crores. So that part was 28%. 17%, which will now also become 18%. So there'll be very, very big boost in the independent aftermarket, where there are so many grey market operators are playing even in a safety item like brakes.
And let's head straight to Khan Market in New Delhi, where Aishwarya is tracking the early festive buzz. I'll also be going to my colleague Charu, posted outside the Nykaa store, watching how online and offline retailers are racing to cash in on the season's shopping surge. But first to Aishwarya in New Delhi. Aishwarya, what's the general vibe on ground? Are shoppers already in festive mode?
Well, Navratri is just around the corner, and of course the GST rate cut is good news as well. What we're picking up currently is that big bargains can be seen across malls. Here at the High Street in New Delhi, Khan Market, you do have certain stores as well, but Shoppers Stop, of course, what we are picking up so far is that they are offering sales up to 50%. Myntra, on the other hand, as far as the online sales are concerned, Myntra running Ganesh Chaturthi as well as Onam offers up to 80% across different categories of products. Besides that, Amazon and Flipkart also, some of the flagship sales will also begin very, very soon. Around mid-September is what you will see. So ahead of course, the GST rate cut discounts and the festive period also setting in, the mood is, of course, peppy and positive.
Aishwarya, thank you so much for that. We'll continue tracking all of the discounts and offers. Let me quickly go across to my colleague Charu Singh, who is joining us and visited the Nykaa store in Chembur in Mumbai, where the festive spirit is already picking up steam. She spoke to some shoppers and staff and got a sense of what's driving expectations this season and how beauty and fashion brands are gearing up for a retail rush.
The government is expecting to come out with GST rate rationalization cuts by September 22. Now, this is expected to increase the consumers' consumption on online retail stores and aggregator apps. We are also expecting to see an increase of about 25 to 30% this festive season, when the retailers are going to be announcing their big sales and inventory is being updated accordingly. So what are we supposed to look forward to? Several retailers on like Flipkart, Amazon, Myntra are going to be coming out with their annual flagship events. For example, the Big Billion Days or Indian Great Festival. In fact, the discounts up to 80% are going to be offered to consumers on this. Other brands and other retailers who are going to be offering such discounts include Myntra. They're also going to be increasing their services under M Now segment, which includes delivery in an expedited manner. Shoppers Stop is also going to be announcing some major sales. And apart from that, we are expecting a lot of disruption and activity on the online retail platforms.
Thanks so much for that, Charu. Moving on to how the markets fared today. Benchmark indices wrapped up Monday's session on a strong footing. The Nifty closed right at the 25,000 mark, while the Sensex surged 329 points to settle at 81,600, riding on upbeat global cues and sectoral momentum. Now, IT stocks have led the charge today, rallying 2.3%, with heavyweights like Infosys and Tech Mahindra fueling the rally. We saw realty and metal indices also posting solid gains, buoyed by renewed investor interest and infrastructure optimism. But on the flip side, FMCG, media and PSU banks came under pressure, capping broader market gains as profit booking and valuation concerns have weighed in. So for a deeper dive into today's movers and shakers, let's hand it over to Harsh, who's tracking the pulse of the market. Harsh, over to you.
Well, the Nifty had a relatively good outing today to start the week off. We were up around 0.4% thereabouts. We were steady, came off the highs for sure, but there wasn't a meaningful decline from the highs. So it was a decent kind of day. We breached 25,000 for a brief period of time during the day, and thereafter we cooled off and we've closed below it though. What led really the rally was IT. It was at the front of the kind of rally we saw. And IT stocks like TCS, Infosys led from the very front. We saw some of these show very good traction in trade. The Nifty IT index was up 2.5% and did very well for the day. As a result, you also saw some positive impact on the Nifty 50 as a result, because you had out of the top 5 gainers on the Nifty, we saw 4 of them being IT stocks. So some bit of zinc clearly visible. What also did relatively okay in trade was something like a pharma index did okay. What didn't do as well though was more of metals, more of defense. So some of those sectors didn't do entirely all that well. Overall, when you're looking at the breadth as well, we were tilted towards the declines, just 900 advances to around 1200 declines. But for a better part of the day, we did fairly well on the breadth as well. The Nifty mid-cap and small-cap indices slipped from their highs over 0.5%. We closed marginally in the red where those were concerned, but that slip at the end of the trading session was obviously something of a concern that we saw, and they of course therefore underperformed the benchmark Nifty 50. Broadly, it was a good day of trade with the broader markets seeing a bit of negativity on the back of that last hour or so where those indices saw a bit of a slip.
Thanks for that, Harsh. Meanwhile, SEAT has just rolled out its new Secura Drive Circle tyres, India's first road-ready passenger car tyres made up with just 90% sustainable bio-based materials. Designed for both passenger cars and electric vehicles, these tyres mark a major leap in eco-conscious mobility.
Are aligned with the entire space of innovation. We recently launched a run flat tire. We've added it up with multiple technologies like CALM and Zera 21. We wanted to take the entire world of innovation one step ahead, and we're very happy that we have an absolutely road-ready 90% sustainable tire. While the rest of the world definitely speaks of concept tire, we wanted to go one step ahead. Today, there are consumers in the country who are highly discerning and who definitely want to not just buy a sustainable vehicle, but also buy everything that's around the vehicle to be sustainable. And for that customer, we wanted to build an interest. And the reason why we wanted to take the opportunity to also celebrate Rohit Sharma, I think he's given us one of the best memories in terms of 264, the innings of 264 runs. And we wanted to club it together, and we have 264 tires, a limited edition, available on one particular size for the market to kind of, and for consumers to kind of adopt to.
You mentioned 264 tires and this being limited edition. So just talk us through what is next for you, because you're with this particular launch. What is your current aspirations as well as expectations from learnings of this, and how quickly do you think that you will be able to roll this out at scale as you mentioned?
The fact that we have 264 tires on a particular size speaks of the capability of the plant to scale up. So we can scale up at from a manufacturing perspective, and we are absolutely ready. Of course, the idea of keeping it limited edition is to see the audience and to see how consumers are interested in this particular space, and that gives us an opportunity to kind of build that awareness, build that interest, and when we see the right opportunity, we will have an absolute wherewithal, either from a sourcing perspective or a manufacturing perspective, or even from a fitment perspective, across the country to scale up into any form and manner.
Meanwhile, RBI Governor Sanjay Malhotra is striking a note of cautious optimism amid rising trade tensions. Speaking at a FICCI event, he addressed the potential fallout from the 50% US tariffs on Indian goods, saying that ongoing negotiations could soften the blow and that the impact on most sectors is likely to be limited. So what's the road ahead for India's trade and monetary policy? Let's listen in to what the governor had to say.
The RBI has always been, very proactive in whatever needs to be done for the betterment, for the advancement and the growth of our country. Insofar as tariffs are concerned, we had post the April announcements by US of increased tariffs of 26% at that point of time. We had projected downwards our GDP growth by 20 basis points. And now we await. After that, there has been another additional 25% tariff, making it 50%. It is yet to kick in. Another couple of days. We are hopeful that the tariff negotiations, the tariff will play out, and the impact will be minimal.
And there's big trouble brewing for Bajaj Alliance health insurance customers. The Association of Healthcare Providers India has asked over 15,000 hospitals to suspend cashless treatment for Bajaj Alliance policyholders starting September the 1st. What does this mean for patients and policyholders now? Pallavi joining us with the full picture, including what hospitals are saying, how Bajaj Alliance is responding, and what customers should do next.
So the Association of Healthcare Providers, which essentially represents roughly about 15,000 hospitals and healthcare institutions across the country, has advised its member hospitals to stop providing cashless treatment services for policyholders of Bajaj Alliance General Insurance, and this is set to come into effect from September 1st. Now, the advisory essentially follows complaints which the AHPI says it has received from member hospitals regarding Bajaj Alliance's refusal to revise hospital reimbursement rates. Now, the AHPI has also said that they are likely to meet representatives from Bajaj Alliance on Thursday to discuss the suspension of these cashless services. Members of the core committee of the AHPI are likely to meet representatives from the company, and assuming the talks go well, we could see a withdrawal of this advisory. Also, the AHPI is also in talks with Care Health Insurance, and they're also likely to meet Care Health Insurance soon regarding the same issue.
When you commercialize speech, you cannot hurt the sentiments of a community. That's the strong message coming in from the Supreme Court as it pulled up comedian Samay Rana and several others for making jokes that mocked persons with disabilities. The court was hearing a petition filed by the Cure SMA Foundation of India, which flagged offensive content from Raina's show India's Got Latent, including remarks about a child with spinal muscular atrophy. NDTV's Nupur Dogra joins us now with more on the court's observations, the influencers' response, and what this means for content creators going forward.
When you are commercializing speech, you cannot hurt the sentiments of a community. These were the remarks Supreme Court today made while pulling up Samay Rana and several other comics on jokes mocking persons with disabilities and rare diseases. The bench of Justice Suryakant and Justice Joy Malabakchi, in very clear words, today made their stance clear that they would not let this issue go easily. They have now asked the comedians to file unconditional apology and publish it across their social media channels and podcast. The Supreme Court also expressed concern about the kind of statements made especially against persons with disability and rare diseases. The Supreme Court today has given the time till next hearing to these stand-up comics, including Samay Rana, to course correct and to show what steps they are taking and how are they using their social media platforms and followers to influence and take forward the cause of persons with rare diseases and disability. The Supreme Court has also asked them to reply on their capacity to bear penalties for their remarks and insensitive jokes against persons with disability. The Supreme Court today made its stance very clear that it won't let this matter go easily. The top court also asked the centre to frame guidelines, to come up with guidelines for comics and influencers using social media to commercialize their speech. The top court said that when it comes to commercialization of speech, freedom of speech cannot be used as an excuse to hurt sentiments of a particular community. So these were some very important observations and suggestions made by the Supreme Court today. The Supreme Court has sought response from centre and especially the ministry, concerned ministry, over the steps they propose to take to ensure that there are guidelines to regulate speeches by these social media influencers.
Thanks, Nupur, and that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Pulling us into this country. They argue, I conclude. They deflect, I drill down. Stop. This isn't a free-for-all. It's a reckoning. No filler, no fog. Only the facts and where they lead. Every night at 9, the case closes because the buck stops here.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
Hello and welcome. You're watching KYC. I'm Harsh Saita, and when a company worth 1500 crore in terms of market cap wins a potential 600 to 700 crore in top line, it certainly rolls a few eyes, and it ought to, right? It's understandable. We're going to be speaking to Signpost India today. It's a very, very small company in relative terms to the companies we speak with, but it's an interesting one because of what I just said. And what I want to know in particular is with regard to, one, their win today, which is around 700 crore in terms of revenue potential over the next 9 years. Even if I broadly extrapolate that to 70 to 80 crore, they've also done another, or rather they've had another big win, which is the Karnataka win. So it's the Karnataka plus the Bangalore Metro wins, which are cumulatively adding around 150 crore in top line annually. That's the broad-based ballpark that is being penciled in. So you want to wait and watch as to whether that actually plays out like the way we're thinking it will, and what after that, what the margins on the business that they are winning is going to be like. So that's number two that I want to know. What are the margins like on the wins? They do 20% plus typically. I'd want to know whether they can maintain that kind of a clip. The third one is, of course, you've won Bangalore as a big metro, but could you win Mumbai and Delhi? Because those could be larger wins, given that the new Mumbai metro is coming in thick and fast. Those could well be potential wins for something like a Signpost India, and it could add to the potential top line and the growth that one is penciling in. And mind you, it's a 450 odd crore top line that you're talking about. So already a 30% growth that we're seeing, and with the potential of that this might hold, and I want to understand how realistic that is, it could well be a tilter in favor of the way one looks at the company. The fourth one is what will take it to win. So say one is that they come out and they say that they are super confident about winning this. How is competition looking at it? How strong is competition in this space? And what will it take? What is it? What are the key factors that they are looking at which give them the confidence that that win is possible? Because for you, the viewer or the investor, or for me, the analyst, it's important to understand what the risks are as well. The fifth piece is understanding the working capital cycle in the business. It's been a bit choppy where cash flow is concerned. We'll talk about that. While the last couple of years has been decent, but I'd want to know whether we can really see an ironed out cash flow coming straight through, or is there something which will get locked in working capital as they start to win these large contracts. The sixth piece is with regard to CapEx. Does their business require it, and therefore what's the funding outlook? Because I've started to see debt increase in the system. So I'd want to know whether that could continue or not, or will we see actually a pay down with regard to where debt is concerned, and then just overall trying to get a sense of what the risks in the business are looking like. So and that is also a bit with regard to how the conversation goes and what's the pulse we all get as part of that conversation. So we'll try and understand that, because mind you, it's a 1500 crore market cap company, so you want to be careful, right? Just blindly considering it will be a tough one. Now let's look at the company itself. It was incorporated in 2008. Signpost India is a merger of two companies in 2023, thereafter listing in 2024. But it was incorporated originally in 2008. It's a digital out-of-home and integrated advertising company. The company focuses on long-term government contracts currently. It combines advertising with public amenities like bus shelters and the like, and I'll talk a little bit about that. And it currently manages around 33.9 million square feet of ad space. So that's the broad brush understanding. Now let's talk about specific services that they provide. One is the digital out-of-home advertising, as one should call it. This includes largely dynamic digital boards. You would have seen it on highways, and it's a slightly high margin kind of a business, uses AI and data analytics. It's used across, say, airports, metros, city centers, highways, as I did mention. The second piece is transit advertising. That is advertising on bus shelters, inside buses at airports. At slightly medium to high margin is the sense that we get. The third piece is mobility advertising. Campaigns on moving vehicles like bicycles, vans, stuff like that. And that advertising also is something that they handle. And Uber having a small billboard at the top, you might have seen that on a few Ubers and certain other vehicles, and that also is part of advertising. Now you look at the conventional out-of-home service. This is a slightly lower margin business. It includes static billboards, street furniture, traditional formats broadly is what this one deals with. And then there's design and content lab. This is more custom creative solutions which advertisers require. So they deal with a whole host of things. But the largest chunk of it is the first one, which is the digital advertising, which is out-of-home advertising. Now let me talk about the business model broadly. It wins long leases or ad rights through tenders that they give, and this is generally to governments and municipalities that they generally work with. And then they install and maintain advertising infrastructure which is handed over to them. They sell ad space also to large brands, agencies, and ensure that that tie-in happens, agency to government, and then thereafter they ensure that there is monetization via display occupancy, asset scale, price optimization. So all of that is what they kind of work around. That's the broad brush understanding of how the business works, and you would have seen it in real life and therefore able to relate to it far better than those graphics which are on your screen. So broadly, that's the way to take it. Now let's talk about the key metrics that we'll discuss today. Now it's a very, very small company, but nonetheless, we'll pull out the metrics that we'll look at: income statement, balance sheet, cash flow, return ratios, shareholding, street cred, street coverage, outlook. So we'll try and cover all of that. We do have the valuation picture, but it's tough to determine, right? It's not exactly as easy to figure out the valuation. So broadly, that's how we'll take it. Let's start off with the income statement, and that will also give us a picture on how the valuation has evolved. Around 40 crore odd of profit after tax, which they've clocked in FY25, leading to approximately 40 times earnings. Broadly is the valuation at which they trade at. Your revenue has grown fairly okay. EBITDA also around 30% growth over the last 2 years, maybe cumulative. But you look at the margins, they've shrunk just a wee bit. Net profit though absolutely flat, and I'll talk a little bit about that trend, which is what may just be a bit of a concern. It's actually the increase in depreciation cost which has led to a lid that they've had to keep with regard to their profit after tax. So this is a non-cash expenditure which is leading to a shrink with regard to the profit before tax, which is impacting the profit after tax as well. So that's something you want to keep in mind, that it's actually depreciation which is hurting profitability. But broadly, that's how it shapes up. This is Q1 FY26 performance of a very, very low base. That's the QOQ growth number. The YOY growth also decently healthy, and an annualized 60 odd crore of profit after tax. So it's gotten slightly better where Q1 FY26 is concerned. You want to understand sustainability of that kind of number. Again, this 38% revenue growth looking quite healthy in that sense. But we've given this a neutral only from a perspective that this ballooning of debt cost is leading to profit outcomes which are far from ideal. So you want to wait and watch as to how that plays out and what the reasons for that could be going forward. Mind you, there is no guidance that this company has given, and hence difficult to kind of extrapolate what this could look like going forward. So we'll probably be one of the first few to understand this better. Let's also now go to the balance sheet, and you're looking at equity capital plus reserves, which are decently healthy in that sense. Let's pull out those numbers if we can. So there you go. So you've got that book value of around 221 odd crore. The borrowing number has gone up, as you can see, visibly gone up over the last couple of years. I'd want to know where this goes. But what is the reason why I'm not too worried? One is you've got a healthy cash balance of around 50 crore, which is a third of the borrowing number. So it kind of takes care to some extent of that borrowing. Also, the EBITDA, the annual EBITDA number sits at around 90 odd crore, which is operating profit before interest and taxes. If I remove interest and I remove taxes, which is typically the cash element of this entire picture, then you're broadly getting a 50 crore odd number. So not looking bad per se. 50 crore cash, 50 crore annual EBITDA, which or rather post interest and post cash expenses kind of earnings, and therefore this gives you a decent picture as to how borrowing is going. Now the only possible risk here is if your working capital need balloons all of a sudden, which is why that big question on working capital, and that will also have an impact on the balance sheet. So we've again been conservative here with great difficulty given this a neutral, but broadly that's the way one ought to think about it. Borrowing could become a problem. Mind you, companies only start facing huge issues even in bad cycles, largely because of borrowing. So if that borrowing number is elevated, you have to be worried. Again, we'll ask that question to management and get a better perspective of that as well. Let me talk about cash flow now. And when you're looking at cash flow to profit after tax, largely the ratios are quite healthy. There's been a large reversal which has happened in FY24. You can see how CFO to PAT has just doubled, 2x of what the PAT is, which is positive, but that's largely because of the drag we've seen in FY23. So FY24 has gotten much better. FY25 largely steady state, around 80 odd %. That's the broad take with regard to how CFO to PAT is. But given that you've seen a large ballooning of depreciation, you would ideally have expected that your cash flow from operations, even in FY25, was far healthier than profit after tax, right? That's generally the norm. 20 crore worth of depreciation expense, and we're not seeing the benefit of that on cash flow from operating activities. So that might also be a bit of a concern, trying to understand all of that. But it's largely because working capital needs have really ballooned, and that's where the concern lies. I'd want to know whether that is realistic and sustainable. Now, the fourth piece, or that's just part of the business, how should one look at it? Now, let's talk about return ratios. Return ratios are in that 15 to 24% band at this point. Again, you want to start to understand sustainability of this over a period of years. So I'd want to wait and watch even with regard to return ratios. A large part of that will be linked to profitability, of course, and capex. So both of that will be slightly more important to understand, and we will try and understand that. So that's on return ratios. Now let's talk about shareholding. 75% promoter owned, no concerns there, and therefore we've given this a thumbs up. The number of shareholders also largely has gone up. It's on an upward trend from 11,000 odd shareholders in FY24. It's up to around 16,500 shareholders currently. So the number of shareholders has gone up, something that you want to keep in mind broadly. Now let's talk about street cred. It's been choppy for a shareholder who's holding this. 24% 1 month, but year to date the stock is down. 6 months the stock is up. And when you're looking at the 2-year performance, which is since listing, which is Feb of 2024, again it's been difficult. So we've again not been able to point a direction, but the returns and the fluctuations have been strong. So you want to be careful, and therefore we've given this one a neutral as well. Let me talk now about what the street coverage looks like. There is one very small brokerage which is covering this one, and therefore there's nothing meaningful here. We of course have to therefore give this a thumbs down. Unfortunately, this is the only one, and it's understandable. 1,500 crore market cap, generally not covered by too many analysts, and it's understandable, and therefore we've given this a thumbs down. Last, on the outlook piece, and there's plenty to do with regard to where the outlook is concerned. I did speak a lot about it already, but they've received exclusive advertising rights for all 67 metro stations by the Bangalore Metro. It's an SPV, or rather a JV formed between the Government of Karnataka and Government of India, and the expected revenue potential is around 700 odd crore. It will attract around 3 crore of monthly ridership, and the company has gained exclusive advertising rights for a 9-year tenure. So clearly positive with regard to this one. Also, let me talk about some developments in July of 2025. Now, in that regard, they've had a strategic exclusive agreement with Comor NB Tech Solutions Private Limited. The highlights of this is they've been granted exclusive rights for advertising and promotional activities across city flow buses, right? And this is of course a premium bus network. They've been granted exterior interior branding rights. It's an exclusive 5-year agreement. It's all positive in that sense, and the agreement commences with the deployment of 350 buses across key urban markets, including Mumbai Metropolitan, Thane, Hyderabad and Delhi. So it's multi-city as well. So that's the second big win. The third one is where the High Court has allowed the company to resume operations. The company has received an order enabling resumption of advertising operations in Bengaluru. The High Court nullified notices prior which had directed the company to dismantle advertising structures. All of that again positive. This should add another 70 crore to top line. So outlook looking good, but I want to try and understand this better and deeper, and we have with us Shripad Ashtekar, who's the managing director at Signpost. But just before that, let's quickly rate it on our KYC rating parameter, and what you'll see broadly is neutral ratings, but we've explained some of those ratings to you, and of course we'll have a better lens into that once we speak with Mr. Ashtekar, who's the managing director at Signpost. Let me go straight to him. So great having you. So let me start off with some of the wins you've had over the last maybe 2 to 3 months. Give us a clear picture. How much does this add annually to your top line, and how quickly does this revenue potential start to translate?
Thank you for having me. This recent wins, which includes more about the transit advertising, which we call in OOH, which is impacting the top line and even the bottom line. The addition has given a growth of around 25-26% the last quarter, and the similar pattern we see from the recent investment what we did in Bombay or in other markets in the country. So our focus area would be always around the transit, which is a more networked and more data-driven approach.
Got it. So how much should it add to top line? Sorry, sir, trying to understand that. And does it come in FY26? Do you expect 150 crore plus in terms of top line addition?
So this revenue which we have projected for 9 years will definitely start giving the yield from the second half of the year, and definitely it will be around the same number what you are talking about.
Understood. So maybe H2 onwards, so may not be the full 150 crore in year 1. So what about the Bangalore High Court order? How much does that add to your top line? Give us that perspective. That should add around 60-70 crore to top line as per disclosures.
Yeah, you're right. So basically, we should look at all the projects which is the High Court which has given the green signal to start with, which is around the traffic booths we have already installed, and the digitization of the panel around the junctions, and plus the Bangalore Metro what we are talking about. We recently signed the contract with BMRCL. So it is more about the traffic commuters. Currently is around 7 to 8 lakhs daily commuter in the Bangalore Metro, and which is going to double as the phase 2 started, which will be around 15 lakhs. So if you and the implementation and the sweet spot is about the tech savvy and young traffic, which will be in the metro commuters. So ideally, we would see the same growth which we have projected for around 700 crores within 9 years.
Got it. So what about the city flow contract? How much does that generate annually?
So it's a small contract as compared to the fleet what we operate nationally, which includes Chennai, Bangalore, Calcutta, Mumbai, Pune. But definitely the data-driven approach of city flow will be adding a lot of value in terms of the delivery part to the brand to get the more precise ROI. So the value proposition, it will be small because the number of buses operating, but it is growing right now. Like Hyderabad also has seen the growth in number of buses. So it's a small number, but it's around 2% or 2.5% to our total last year revenue.
Okay. So that's relatively smaller in comparison. So what is the potential coming in from Delhi and Mumbai Metro? Are those at all up for grabs? Are you in the running for it? and what is competition looking like? How likely are you to win it?
So Bombay, already 4 lines are operating, out of which 2 we are already having a rights for 15 years, which is a line number 7 and line number 2A. And we have the exclusive rights for 15 years for the 2 lines. And upcoming lines, definitely we will be participating, which is more towards the exterior part of the infrastructure of metros in Mumbai. And Delhi also will be focusing on to improve.
When did the revenue for this start to come to you? Was it Q1 FY26 or before?
No, as I say in Out of Hope, whatever we start, see, it's a contract for long term, right? So whenever we implement the phase-wise implementation, the revenue starts from that spaces. So suppose out of 67 stations, if we start implementing around 10 stations within 3 months, so the revenue from 10 stations will start coming, and subsequently the same phase-wise we will be completing that.
Got it. Okay. What is the margin typically that you operate at, and what is the revenue potential from the likely wins you can have from a Mumbai or a Delhi? Just give us those 2 numbers broadly.
So overall transit, which has a projection of 4,000 crores revenue by 2027, and currently what we have is around 10-15% out of that. So the growth pattern, what we see with the recent wins and the other contracts which are operating, where the investment has already gone, the bus shelters network in Mumbai, you see the huge difference in terms of quality and the implementation what we did, including the design part, which has been recognized globally. But as you see the projection or the growth as a